spoken a lot about what they're doing with AI, but so are waiting for, some sort of commentary, but are also like fully aware that, it has this huge following. It has all of the iPhones and the devices that we use that it can plug into.
They've also had 4 consecutive quarters, right, of revenue decline.
Yes.
So could they turn it around? That would be a big deal.
That's what analysts are forecasting. They're looking for a slight increase in revenue for this quarter. So we'll see what happens there. One thing that I actually heard from an investor that was interesting is that because the setup for Apple going into earnings is actually the most negative of the 3, they might have the best opportunity of surprising to the upside and maybe seeing a little bit of lift in shares. So that's something that I'll definitely be watching for as well if they exceed expectations, because people are sort of worried about what they're going to put out.
And then we have NVIDIA on February 21st.
Hey, we got a lot going on before we get to NVIDIA, Carol.
I know. Don't rush things. Carmen, thank you so much. Great setup for when those folks report after the closing bell. Bloomberg News equities reporter Carmen Reinecke. All right, so listen, that's top of mind. So too is, here we are 24 hours since that first Fed decision of 2024. Wall Street's kind of shrugging off, it feels like, Jay Powell's message that a March Fed cut is unlikely. We mentioned at the top, Charlie Pellet saying stocks are up, bond yields are down. We did also have some economic news today.
Yeah, meantime, ahead of tomorrow's monthly jobs report, we got weekly unemployment claims, which actually unexpectedly rose to a 2-month high. Separate data showed labor productivity advanced at a rapid pace, while a measure of U.S. factory activity climbed, Carol, to the highest in 15 months.
All right, with us is our Stuart Paul, U.S. economist at Bloomberg Economics. He's here in studio. And then out there from our Princeton, New Jersey bureau is Ira Jersey, Chief U.S. Interest Rate Strategist at Bloomberg Intelligence. Hey, Ira, I want to start with you. I do think about, there's nothing like a good night's sleep and a glass of wine in my case to kind of start thinking about what we got from the Fed. And then...
Is that where you thought about the Fed? Like you went home and you had some wine and you were like, I'm just going to think about the Fed?
Maybe
that kind of is that what happened?
We did talk about it at dinner. So we've had 24 hours. Talk to us about the last 24 hours and the significance of the moves that we got in rates. Let's start there.
Yeah, the market moves were meaningfully different than I think what the rhetoric was from the Fed and even some of the data that we've received in the last 24 hours. This morning's ISM new orders number, for example, being above 50 was pretty positive for the economy, and then you had a number of other pieces of that report that you would have thought would have helped the bond market sell off at least a little bit, or at least not rally a lot. But instead, we're continuing to get this bull flattening of the yield curve. We have long-term yields falling more significantly than short-term, and that's, I think, partially indicative of the idea that even though the Fed probably won't cut in March, at least that's been our view for a little while now, the market is still going to be pricing and is still pricing for very significant rate cuts, and that's one reason why you have the long end of the curve continuing to fall, even though short-term rates are going to lag here a little bit in terms of this current rally.
But Ira, there does seem to be a disconnect between what we heard from the Fed chair yesterday and what we're seeing in the rates market. What's going on there?
Yeah, well, like I said, it's that we haven't changed kind of the ultimate place of where we're going to be.
But we've changed the speed of it, right?
Well, we changed the speed a little bit, which is a reason why 2-year yields have been lagging the move in 10-year yields today, right? That's kind of the idea there. That's number one. And number two, and more investors that I spoke with today, and I didn't have a chance to talk to them yesterday, today there is some fear about maybe another little regional banking crisis that might crop up. So one hedge for that is people buying treasuries in order to kind of hedge risk in other places, like if there are regional bank issues that crop up again and cause another risk-off event.
I will say, Carol, the S&P Regional Bank Index down by about 2.6% right now.
Yeah, there's nervousness. We talked with Connect One Bancorp's founder and CEO Frank Sorrentino, and he's like, he seemed to indicate that there will be one-offs. There are going to be particular situations, but I guess time will tell. Stuart, come on in on this conversation. Your team's note on the Fed's decision, I loved it. It's like when you get that test back in grade school and there's a lot of red marks. The Fed changed the statement a lot from January, from the last meeting in December.
That's right. So there was a tightening bias that had been included in the Fed statement previously, and everybody was on watch to see how that would be removed. It was removed, but that's not the entire story. What the Fed then included in the statement was this idea that is waiting for additional evidence that inflation is going to be sustainably falling to the 2% average inflation target before it starts considering cuts. So as Ira was mentioning before, that set the stage for Fed Chair Powell in his press conference to basically take March off the table. But if the data evolves in such a way that, or I should say, if the data deteriorates in such a way that the Fed has to respond, we think that odds are, still in favor of a March cut. We'll just have to see the data.
You're holding on to it.
We are.
Okay, that's really interesting to hear because Carol knows this, and people have been listening regularly over the past few weeks. I've been beating the drum about these reports of layoffs that we've seen, whether it's UPS, whether they're one-offs at media companies. The Messenger shut down yesterday.
The tech industry, it feels like.
The tech industry is still happening right now, Stuart. Is there a chance that we see something with change in non-farm payrolls tomorrow that could change the way the Fed is thinking about March?
It's possible. There's a lot that's actually going to be going on in the January payrolls report. So the first thing is that December was a very, very warm month. And if you account for the effect of weather on December, it drove payrolls up by about 100,000 jobs. In the subsequent months, so in the January report that we'll see tomorrow, there should be a payback of about 25,000. Add in the fact that January, especially during the survey week, was especially cold, and so just the combined weather effect, December into January, could create drag of about 100,000 jobs on January payrolls. Add into that the fact that there are going to be revisions to the seasonal adjustment factors, and there are going to be updated population controls in the household survey, and it sets the stage for a lot of curveballs that can be thrown at the Fed in the first jobs report of 2024.
Ira, how do you think that potentially, because it could be a little bit of a messy report with a lot of caveats tomorrow morning, could play out in a bond market or U.S. Treasury market that's already had a fair amount of volatility this year?
Yeah, obviously the headline is going to get all the attention. Even though that nuance I think will be very important for future reports and for how we kind of readjust our expectations for the February and March payrolls report that we'll get prior to the next to the next couple of Fed meetings. So I think it's always the headline, it's always the unemployment rate, it's always the non-farm payrolls number. You get those red headlines and there's going to be a massive knee jerk. Now after that, the question becomes how does that get adjusted away after people dig into the details and you get people like Stuart coming out with their reports and notes saying, hey, this is actually a little bit better, a little bit worse than the headline might suggest, and then the rate market will probably move a little bit. I think importantly, from the rate market perspective, it's watching what we're pricing for basically the middle of next year, right? So if the Federal Reserve is going to cut interest rates 100 basis points, 125 basis points, like Stuart and Anna Wong in Bloomberg Economics think this year, it's also, do they keep on going next year another 100 or 125 basis points? And if that's the case, then nothing changes. If we get more or less a terminal rate that's much lower, that can wind up seeing, you can wind up seeing 10-year yields rally significantly more, maybe down toward 3.5% in a hurry.
Well, Stuart, baton to you. I mean, does the Fed, are you thinking already about 2025?
We are. So right now we're expecting 125 basis points this year, 2024, another 125 basis points next year. So yeah, we're thinking about the Fed taking the disinflation momentum that we've seen recently very seriously. Sure, they have to wait to see additional data coming in. We think that in the next couple months, it's going to be sufficiently strong evidence that the Fed is going to begin cutting rates, and they'll get 125 basis points of cuts in this year.
Ira, do I hear the R word anywhere in all of this cutting?
Well, so I think if they cut 125 basis points, we'll have to be probably pretty close to a recession. So it's just to show that there's not necessarily a house view. Stuart and his team and I have a slightly different view on the pace of cuts. Now, we all think that there's going to be cuts, and let's face it, when you look at a vast majority of the economy, things are slowing down. The question is, will they be slow enough that the Federal Reserve will feel compelled to cut 5 times this year, right? 525 basis point rate cuts. I think we're almost nitpicking here. I'm thinking there's more like 100 basis points of cuts. So it's we're talking about 1 cut difference, and I think then we get that next year instead of this year, right? So that's why it's really that mid 2025 numbers that matter.
I just want to get to Friday at 5 p.m. All right, guys. Bloomberg Economics U.S. economist Stuart Paul, and of course Ira Jersey, our chief U.S. interest rate strategist here at Bloomberg Intelligence. This is Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet, 2:21. The time now on Wall Street. We have got the Dow, the S&P, NASDAQ 100 index, and the Russell 2000 index all moving higher ahead of big tech earnings after the close of trading today. Right now we got the S&P up 45, gain there of 0.9%, just about the best level of the day. The Dow higher by 266 points, up 0.7%. The NASDAQ Composite Index up 166, up now by 1.1%. Russell 2000 up by 1.2%. The 10-year right now, 3.86%. The 2-year, 4.19%. Spot gold up $17 the ounce, up 0.9%. A retreat for crude right now, $73.94 a barrel on WTI, down now by 2.5%. New York Community Bancorp shares extending losses after a sell-off spurred by a surprise loss yesterday. The stock, you recall, was down 37% yesterday. Today, NYCB down another 8.1%. We're also keeping an eye on the Immerse Sports IPO. Shares began trading today at $13.40 a share after its initial public offering. Right now, Immerse Sports at $13.45. Emmer, by the way, brands include Wilson tennis rackets and Solomon ski boots. Recapping stocks higher. S&P right now up by 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Well, geopolitics always on our mind here at Bloomberg. Negotiations advancing for an agreement to pause the Israel-Hamas war and free civilian hostages captured by Hamas, that according to people familiar with the matter, in a deal that those involved believe could be a crucial step toward ending the 4-month conflict. So watching that, but we're also watching other stuff.
Yeah, we're keeping an eye on the war between Ukraine and Russia, Russia's invasion of Ukraine. European Union leaders struck a deal on a $54 billion financial aid package for Ukraine. Carol, the moment is crucial for the country, which has warned that its coffers are emptying as it grapples with a shortage of weapons to fend off the Russian military campaign. Kyiv is still waiting on $61 billion in assistance from the U.S., yet to be backed by Congress.
All right, so we want to talk about that. We also wanted to talk about how Russia is in a new push to expand its influence in Africa. So a lot to get to. Back here on Business Week is Angela Stent, senior fellow at Brookings, author of Putin's World, Russia Against the West and With the Rest. She's a former national intelligence officer for Russia and Eurasia at the National Intelligence Council, also served in the Office of Policy Planning at the U.S. State Department. She's a great voice on this, and she joins us once again on Zoom from Washington, D.C. Angela, great to have you here. Hard to believe we're on almost year 3 of the war between Russia and Ukraine. Talk to us about where we are today and what you see maybe as the way forward, for better or for worse.
Yeah, well, where we are, this is still a very grueling, grinding war of attrition. The Russians have made some territorial gains in the past couple of months, and they seem to be still on the offensive. The Ukrainians, of course, their counteroffensive last year didn't go the way they'd hoped it would, and they are very much on the defensive now. As you said, that their problem is they're running out of ammunition, they're running out of soldiers, and they're running out of money. It's very good that the European Union finally got round Viktor Orban's veto, and they voted the 50 billion euros for them. But things don't look great in terms of our own Congress. Even if the Senate gets a bill done and passed, the House looks like it won't agree to it. And that would really make it very difficult for Ukraine in 2024, because we are the ones that supplied them with the most advanced weapons.
Let's talk a little bit. Yeah, I want to talk a little bit about that, Angela. How crucial is that $61 billion that Ukraine is awaiting on from the U.S.? How critical is that to Ukraine's fight?
I mean, it's critical. At least they've got the money from the Europeans, but they need they need the money. It's to keep the government going, to purchase the arms and the ammunition and everything that they need, to keep the economy from tanking. So again, if they don't get that U.S. aid, things are going to be very, very difficult as the year goes on.
Hey, you know, Angela, one of the things we love is your depth of knowledge when it comes to Russian President Vladimir Putin. I'm thinking if you were advising U.S. officials and their allies, what's the security kind of elevator pitch, if you will, at this point in this war, that all of those folks, the U.S. and their allies, have to keep in mind if Vladimir Putin ultimately wins or gains ground in Ukraine here? I mean, they already have, but in this go-round, if you will.
No. I mean, I think the elevator pitch is if the Russians defeat the Ukrainians, which they might if the Ukrainians don't get what they need to continue the war, then this represents a massive security threat to Europe. They might stop at Ukraine for a while, but as long as Putin or someone like him is in the Kremlin, they want to continue taking back what they believe is theirs, the former Soviet states. You have the Baltic republics. They've even talked about Poland and restoring the Russian Empire, which of course included part of Poland. So it is a security risk. And the other part of it is, what will the rest of our allies think? The Taiwanese, all of our other allies, if we don't supply Ukraine with what we've promised them, doesn't look good for the U.S. around the world if that happens.
So it raises the question of what happens here in the United States in November, Angela. How are you watching politics play out between now and then, and ultimately who wins in November?
Well, I'm watching it very carefully. I think we have a pretty good idea of what Donald Trump would do were he elected president. In this, he wouldn't support the Ukrainians, and he'd make a deal, some kind of a deal with the Russians. We can talk about whether he'd try and pull the U.S. out of NATO as well. He tried to do it last time. So I'm watching that very carefully. If President Biden were to win, then I think we would have a continuation of these policies. But I think we would still need, going forward, a kind of even more robust U.S. and allied response to what Russia's doing to make sure that they don't defeat Ukraine.
Yeah, I feel like there's a fair amount of critics on both sides of the political aisle, depending on or either who wins come November, because I think there's a lot of folks who are talking about this being existential threats around the world, and that the U.S. plays a role no matter who is in the White House, and they kind of need to step up. Having said that, one of the reasons we really wanted to bring you on initially was a story that came across the Bloomberg by our Bloomberg team about what Russia is doing, its new push to expand its influence specifically in Africa, and recruiting for its own army there to replace the Wagner Group's mercenaries across the continent. We have all talked about the Wagner Group a lot over the last couple of years. Of course, its group's former chief, Yevgeny Prigozhin, died last year in what some would say was maybe a suspicious death. But having said that, what does Russia want ultimately, as maybe it goes for more as it expands its presence perhaps in Africa?
Well, it certainly it would love to recoup the influence that the Soviet Union had in Africa, which was really quite considerable. And then, of course, Russia withdrew after the Soviet collapse. It's to recoup that. It's now backing a number of, or Wagner was backing, and I guess the Russian army, the new Africa Corps, ironic, since that was what Hitler called his troops who fought in Africa. But this new Africa Corps will support these Russia-friendly governments, particularly in the Sahel. They're military dictators, they're authoritarian leaders, and they have lots and lots of resources. Wagner made an enormous amount of money out of these mining resources, gold, diamonds, other things. So the Kremlin needs that. It'll take that money and help it fund the war in Ukraine, and it will expand its influence as a number of these countries. They're suspicious of the West. The French have withdrawn, like from a place like Mali, and what the Russians are offering these leaders too is that they will support them in their fight against insurgent groups. They give them intelligence support, military support. So this is really Russia back to Africa.
So what would you say you'd suggest to policymakers about the way they need to be watching what Putin does, what Russia does around the continent of Africa?
Well, I think, first of all, we, the U.S. and our allies, we need to make sure that we still have a presence in Africa. I mean, Secretary Blinken has been there fairly recently. So we're watching for the Russians apparently want to build a military base in the Central African Republic, watching what the neighbors of some of these countries do, because I think the Russians are there to stay. And from the African point of view, and I've heard this from Africans, they see Russia really as a balancer against China, and they don't want China to dominate the continent.
You know, Angela, I know we've talked about this a lot here, and I think about sometimes there's folks here who are listening or watching. We have a smart audience, but I think sometimes they're like, well, that's far away. It's more of Europe's problems. But it's not, ultimately. It's the world's problems in terms of what Russia does ultimately and Vladimir Putin does.
Yes, it's certainly. I mean, we are in this, era of great power competition, which some people thought had gone away, but obviously didn't. And yeah, the more that Russia can expand its influence and get the loyalty from these countries and take their resources, the more they challenge us, and it makes it harder for us and our allies to maintain the kind of, international rules-based order that we would like to maintain.
Angela, you know that whenever you come on, we get an update on what's happening between Russia and Ukraine. I always ask you the same question at the end. How does this war end? Here we are almost 3 years into it. How do you think it ends now?
Still very difficult to say. If the Ukrainians don't get what they need to continue this war, then they may have to make a deal with the Russians that involves territorial concessions. That's one scenario. It's very hard to imagine a scenario where Vladimir Putin says, okay, I've done enough, it's time to end this. No sign that that's happening. So I'm afraid that as we go into the third year of the war, there's very little sense of how this is going to end.
Does it end this year? Real quickly.
No, I don't think so.
All right, going to leave it there. Listen, so appreciate it. Once again, Angela Stent, Senior Fellow at the Brookings Institution. Her book, Putin's World, Russia Against the West and With the Rest. And I know we've kind of kidded her, I think, in times past about, are you working on a new book? And maybe what you would call it. So looking forward to see what she may put forth in the future.
Oh, we got to stop calling on her to come on the show so she could work on something.
This is true. This is true. All right, folks, quick check on the markets for you. S&P 500, just up about 42 points here. That's a gain of about 0.9%, about 0.6 higher on the Dow Jones Industrial Average. Really, it's the tech market really once again leading in the trade ahead of those big earnings after the close. NASDAQ right now up about 1%. Of course, Apple, Amazon, and Meta all after the closing bell today.
Yeah, Apple up right now about 0.9%, and Meta up 1.3. Hey, let's get to Washington, D.C. for a check of the latest world and national news. We got Nancy Lyons in the 991 newsroom. Hey, Nance.
Hey, Tim. U.S. officials have reportedly approved strikes against targets, including Iranian facilities inside Iraq and Syria. The strikes would be in retaliation for a drone attack that killed 3 American troops based in Jordan. Defense Secretary Lloyd Austin says this is a dangerous moment in the Middle East.
We will continue to work to avoid a wider conflict in the region, but we will take all necessary actions to defend the United States, our interests, and our people. And we will respond when we choose, where we choose, and how we choose.
Secretary Austin speaking in his first news conference since being treated for prostate cancer. President Biden has issued an executive order today targeting Israeli settlers who've been attacking Palestinians in the West Bank. It could lay the groundwork for sanctions. A powerful storm system is hitting Northern California. It's the first of 2 back-to-back atmospheric rivers. Rosie Ritchie is co-owner of the Beach House restaurant in Seal Beach.
Well, after the last flood, we are very concerned, but we're happy because the city brought the berms back, which is nice. That'll protect us.
Flash flooding is a risk, along with high winds, power outages, even possible landslides. Gusts in the area have reached 55 to 70 miles an hour. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
Connection lost.
From Bloomberg World Headquarters, I'm Charlie Pellet, all about big tech earnings. Coming up after the bell, we will be hearing from Apple, Amazon, Meta Platforms. All three are trading higher right now. Shares of Apple, they're advancing by 1%. Amazon up 1.8%. Meta Platforms up 1.3%. And Bloomberg Radio and Television going to be all over those earnings as they hit the Bloomberg. Right now, the S&P is advancing 46 points, rebounding somewhat from yesterday, up by just about 1%. Dow Jones Industrial Average up 272 points, up 0.7%, while the NASDAQ Composite Index is up 165, a gain of 1.1%. 10-year, 3.86%, with a 2-year that's yielding 4.19%. Gold up $16 the ounce to $2,055.93. That is a gain of 0.8%. Bitcoin is advancing as well, up 1.1%, 42,939 on Bitcoin. And West Texas Intermediate crude down 2%, 74.32 a barrel. Okta, a software company known for login and identity services, cutting 7% of its staff to reduce costs, adding to a list of other tech firms that have been doing the same this year. Okta shares are up now by about 3.3%. Peloton Interactive shares plunging after the company said it does expect to record another sales decline in the current quarter. Right now, we've got Peloton down by almost 22%. First day out for Immerse Sports shares. They began trading at $13.40 a share, and right now Immerse Sports is trading at $13 $13.39. By the way, its brands include Wilson tennis rackets and Solomon ski boots. Again, recapping, U.S. stocks are higher. S&P right now up 46, up by 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie Pellet there with your market update. Hey, speaking of the markets, a name that we've been keeping an eye on today is Universal Music. Shares of the company down about 2.25%, down more than 3% at their lows today. The world's biggest record label, counts Taylor Swift.
Who?
Drank. Did I say drank?
Oh, I thought you said Taylor Swift.
I meant Drake.
Okay.
Taylor Swift and Drake among its artists, which Universal has begun pulling the music from the social media platform TikTok after they've had some extensive contract negotiations between the two companies that have not gone well.
Well, TikTok calling the Universal decision sad and disappointing. With more on how we got here, we have Chris Palmieri, entertainment editor at Bloomberg News. He joins us from our LA bureau. Chris, good to have you with us this afternoon. Contextualize this for us. How did we get here, and how big of a platform is TikTok when it comes to music these days?
Well, in the really big picture, I mean, this is a story that's almost as old as the music business. Anytime a new technology comes along, they're required to renegotiate the way the money changes hands. I mean, if you think even just as recently as the MTV era, it used to be MTV would play these music videos for free, and then eventually the record labels said, hey, you know, you're making money off of our content, and you should start paying us. And we saw this blow up 10 years ago or so. Warner Brothers pulled its music from YouTube. This is the latest manifestation of that. You know, TikTok is a giant company, over 100 billion in revenues, 1 billion users. But Universal Music says it's only about 1% of their revenues, and that's a formula that has to change.
Yeah, that sounds like some basic math that kind of is glaring. Having said that, who's got more at stake here?
Well, certainly Universal feels like it's flexing its muscles. As you mentioned, it's the largest record label in the world. It's got some of the best stars. And what TikTok's been doing, they said, is dropping ads for some of the lesser-known talents and videos for some of the lesser-known stars to try to put pressure on Universal to cave, but keeping the big names. And Universal said that's just an unacceptable tactic. What's interesting, in the letter Universal put out, they really attack the company on a lot of different levels. You know, the deep fake contents that TikTok isn't really policing well enough, they said. There's a whole issue about using AI to create fake music from stars that, once again, Universal says is infringing them, and TikTok isn't doing enough. So there's a lot wrapped in here.
Chris, maybe I should ask it a different way. Like, who needs the other more versus who's got more at stake? Like, does Universal need to have its artists on the TikTok platform? Does it ultimately kind of generate either buzz or revenues for their artists, or vice versa?
It definitely does. I mean, there are artists, if you think Lil Nas X or Olivia Rodrigo, who really got their start on TikTok. It is a medium that can launch careers and certainly continue to promote them. And the very fact that it's so interactive, you know, people are taking this music and doing their own dance routines and things like that. It's hugely important. That's what every artist and every record label would want. But you know, TikTok, on the other hand, has been trying to diversify away from music, which was so important to it, and has been running tests. We've reported in Australia where they were sort of, using different music, not the ones from the labels, and trying to sort of emphasize that the music isn't that crucial to its overall strategy. But my sense is that both these companies need each other.
Do we know, Chris, how these deals work traditionally? Like, does TikTok pay Universal each time a user chooses to feature one of a Universal artist's songs on the platform?
There is definitely a compensation structure. I don't think they've gone public with it, but it's this is a perennial issue with the streaming companies too, that artists are getting just such a small amount. You really have to be a Taylor Swift to get the kind of big bucks. So this is just this tug of war that's been ongoing.
It is interesting too. Like I'm looking at some of the reporting that's been done. ByteDance generated more than 110 billion in sales last year. Revenue from TikTok accounted for only 1% of UMG's total. This is at least coming from the music publisher. I mean, again, we go back to this basic math. It does look like some unfair or some compensation that needs to be righted. So is there a middle ground that you think ultimately that these guys will come to, and right now they're just kind of both flexing their muscles a little bit?
You'd have to believe that. I mean, one of the things Universal said is that TikTok actually offered them less money than under the current terms, which is hard to believe. But ultimately these things work out. When I first heard this coming, I sort of likened it to the deals between cable TV operators and the networks, and there's always some, right before football weekend starts, there's some contract renewal, and this coincidentally maybe is just before the Grammys this weekend where everyone's going to be talking about this. Is this just another sort of pressure point that ultimately presses them to reach an agreement?
I'm glad you went there,
Chris.
Chris. Yeah, well, so I'm glad you went there. So in your prediction or in your opinion, you would imagine that these two companies would reach an agreement in the shorter rather than in the longer term?
Yeah, although, as I mentioned, the case, I think it was 2008, 2009 with Warner Brothers and YouTube, that went on for months before they ultimately reached an agreement. So I can't predict how long it will last, but I feel like it will end some point.
It's just, I'm not a huge TikTok user, to be honest. I'm not looking at the platform a lot. Like, people send me TikToks and I'll check them out, but it doesn't seem like TikTok is TikTok without licensed music. I mean, these are like integral parts to TikToks.
It certainly does seem that way. I mean, that's sort of what we think of first, really, is all those sort of dance videos.
All right, so is there a timeline? What are you watching for? You cover this industry. We'll look for some more reporting out of you and the team there, but I mean, what are you kind of keeping an eye on? Is there a deadline, a date that we should be watching?
I don't think there's an immediate deadline, but like I said, this is going to be the talk. A lot of parties here in Los Angeles, a lot of events leading up to Sunday's Grammy Awards. This is going to be the #1 topic.
Yeah, pretty interesting.
Who wins Sunday?
There's a lot of women up for grabs.
You know what's so interesting about this story is that TikTok's DNA is music. I mean, it began as like this company Musically, where people lip synced, where people did karaoke. I mean, that's what the platform
That's the stuff I like to watch, and it's kind of fun. People dancing.
It's evolved from that, but I mean, that's TikTok. That's core to TikTok's DNA.
Yeah, so you do wonder, Chris, ultimately, do they have to have, this kind of relationship and collaboration? Just got about 30 seconds. I mean, they've got to figure something out. Would you say yes or no?
I would say yes. Yeah, I can't envision either company living without the other.
All right, we're going to leave it on that note. Chris, thanks so much. Really appreciate it. Chris Palmieri is entertainment editor at Bloomberg News, joining us from our LA bureau. And again, we continue to see, though, shares of Universal just a little bit lower in today's trade, down more than 3% at their lows, but down about 2.25% right now.
Well, equity markets are moving the other way. The S&P 500 at session highs up more than 1% right now. The NASDAQ Composite up 1.2%. The Dow up 0.8%.
Apple's up 1%. They're going to be reporting after the closing bell. Quick check on Meta, which has really been an outperformer here in 2024. This stock is up about 1.5%. We'll also, of course, hear from Amazon. This is Bloomberg Business Week.
your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Right now, Amherst Sports shares are at $13.40. They went out this morning just about at that price. Amherst brands include Wilson tennis rackets and Solomon ski boards. Amherst Sports IPO is the biggest since Birkenstock's $1.48 billion listing last year, according to data compiled by Bloomberg. Well, the pressure now on Apple, Amazon, Meta platforms to come through after the close of trading today. Shares of all 3 big tech companies are advancing. Right now, Apple is up 1.1%. Amazon higher now by 2.1%. Meta platforms up by 1.6%. Complete coverage on Bloomberg radio and television as those numbers break after the close of trading. New York Community Bancorp is extending losses after a sell-off spurred by a surprise loss. Yesterday, we had New York Bancorp down 37%. Today, shares are down another 8.7%. Deutsche Bank's provisions for losses in its American commercial real estate group were more than 4 times bigger than the last quarter, as it warned that refinancing poses the greatest risk to the struggling sector. Meanwhile, Deutsche Bank plans to cut 3,500 jobs over coming years. The reductions are mostly in back office roles. Lazard beat analyst profit expectations, capping a challenging year for deal making and strengthening the position of CEO Peter Orszag in his first year leading the firm. Shares of Lazard, they are advancing now by 4.4%. Again, stocks higher ahead of major tech earnings after the close of trading. S&P now up by 1.1%. Those are our top company stories at this hour. I'm Charlie Pellet. This is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. I'm Tim Stenivek. That's Carol Massar. Let's get a check on the latest world and national news. For that, we go to Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. President Biden is signing an executive order allowing the U.S. to sanction those engaged in violence against Palestinians in the West Bank. 4 Israeli settlers are being sanctioned today. National Security Council spokesman John Kirby says such violence is a hindrance to peace.
The president has spoken very, very clearly on this since the very beginning, that the settler violence in the West Bank is unacceptable.
National Security Council spokesman John Kirby. People familiar with the discussions also say negotiators are moving toward an agreement to pause the Israel-Hamas war and free civilian hostages captured by Hamas. It's a deal that some believe could be a crucial step toward ending the 4-month conflict. Jennifer Crumbley, the mother of convicted Michigan school shooter Ethan Crumbley, is testifying today in her own defense. She and her husband are charged with involuntary manslaughter in connection with the school shooting for allowing their troubled son to even own a gun. She testified today they all were close.
I trusted him, and I felt like I had an open door and he can come to me about anything. I mean, I felt as a family, we were the 3 of us really close.
Prosecutors allege Jennifer Crumbley ignored her son's mental health when they gifted him the gun that was used in the attack. Ethan Crumbley has been sentenced to life in prison. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to you, Tim and Carol.
All right, Nancy Lyons, thank you so much. All right, one more thing this hour, and this is a story courtesy of the Wall Street Journal. It's entitled, "One of America's Hottest Commodities is Probably in Your Trash."
What are we talking about here? We're actually talking about OCC. It's old corrugated containers. So think recycled cardboard, old pizza boxes, those boxes you get from Amazon. That's a hot commodity right now.
Yeah, and apparently paper mills at home and abroad are gobbling up America's recycled cardboard, driving up prices for those old pizza boxes and other corrugated containers that they pulp and make into new packaging. There's a real demand for it because it sounds like there's a little bit of a shortage as well.
Okay, but here's an issue, Carol. We're seeing some recent research that actually suggests that we're not recycling nearly as many of our old boxes as we could, particularly at home. So different habits in the workplace and businesses than people have at home. One of the reasons is due to residential recycling that's been spotty. And the result of that is that this type of valuable material, old corrugated cardboard, OCC, old corrugated containers, ends up not being recycled and going back to mills, but instead ends up in the ground in landfills.
Right, we need that raw material, right?
Yeah.
And what's interesting too is the Red Sea conflict. You know how we talk about what's the impact of that? This is also contributing and adding some pressure, according to this reporting by the Wall Street Journal. It makes sense, though. The region, the Middle East region, that region is, their OCC buyers are looking here to the United States specifically for their raw materials, and that means more competition for recycled boxes on the West Coast, at least according to the analysts, they say. The other thing is we've got an opening of several new mills that need used cardboard to make fresh container board for corrugated shipping boxes and paperboard, which is, you know, they become our coffee cups, they become our cereal boxes. So again, some things going on more broadly in the world, some things going on when it comes to the industry in terms of mills that is adding up to higher prices here.
Okay, prices have been highest lately at West Coast ports, where prices have risen by about a third since December of 2022. Here in the domestic market, prices have climbed sharply in the Southeast to around $150 a ton in some cases. Again, this story courtesy of the Wall Street Journal.
Yeah, just interesting against our macro backdrop, I should say. All right, coming up next, we've got the close on Bloomberg TV. Bloomberg Business Week continuing, though. On our side, we're going to talk about those big earnings after the close. Also, the U.S. CEO of eToro will join us. Some more details for you on that in just a moment. Welcome back, everybody. This is Bloomberg Business Week on radio, on TV, on YouTube, and of course, Bloomberg Originals.
Hey, stocks at the session highs right now. We're going to get an update from Charlie Pellet in just a minute, but a little preview. The S&P 500 and the NASDAQ both higher right now by more than 1%. That's Carol Masser. I'm Tim Stenevec. We're talking about equities because, and talking about tech because after the bell, Microsoft, Alphabet, and AMD, we talked about them earlier this week. They're struggling to meet AI expectations. What happens, though, to the companies that report after the bell today? Yeah, we're going to talk about all of them. But what's interesting, those were struggling because we had such high expectations when it comes to the AI, artificial intelligence impact. What we're going to get into, a great story by the team, including our Ian King, about how there might be hope for AI's role in drug development. It's a really fascinating read from the Bloomberg Business Week team and Ian. Every time we hear the word NVIDIA, you got to take a drink, okay? Okay, deal. Okay. Also, the U.S. CEO of eToro is going to be joining us on what exactly investors are buying and selling on their platform and who's doing it. Yeah, I'm curious about that in terms of the demographics and what they're doing. Plus, after the close, as we mentioned, Apple, Amazon, Meta all reporting. And for all you skiers, Tim Stenevec. I'm going this weekend. You are? Yeah, I looked up today whether or not the resort that we're going to is owned by Vail Resorts. It's not. It is owned by private equity, though. Interesting, because Vail owns a lot. They do own a lot, and how that buying up all those resorts, especially here in the Northeast, has sparked the Great Northeast Ski Revolt. All right, all of that to come, guys, over the next couple of hours. First up, though, back to Charlie Pellet, some news breaking, and he's all over the markets here.
Indeed, we got you covered here at Bloomberg. Wall Street banks, including J.P. Morgan Chase and Bank of America, are in talks to provide as much as $8 billion in financing for a buyout of DocuSign that values the company at around $13 billion. That headline breaking right now on the Bloomberg. All of this according to sources. DocuSign shares, they are advancing on this report. Right now, we have got DocuSign actually just moving lower. DocuSign now down by 1.7%. But again, repeating the headline, JPM B of A in talks to finance a $13 billion DocuSign buyout. Stocks higher across the board right now. We've got just about 58 minutes to go until we start getting earnings from Apple, Amazon, Meta platforms. Pressure is on to come through after the close of trading. Shares of all three are advancing. Right now, we have got shares of Apple up by 1%, Amazon higher by 2.2%, Meta platforms up now by just about 1.8%. It is an up day across the board for the Dow, the S&P, and NASDAQ. The January Fed meeting is behind behind us with one of the worst days for stocks this year after Fed Chair Jay Powell's news conference. So what about the Federal Reserve's messaging? Liz Young is head of investment strategy at SoFi.
I think that they are pretty terrified to repeat some of the mistakes of the 70s. And what he did yesterday was remind markets that even though you may want a cut in March, you may want us to start doing that to support valuations, the data that we see and the confidence that we have isn't quite there yet. So let's be realistic.
And you can hear more of that conversation on the Open podcast. You can download it wherever you get your podcasts. Shares of Immerse Sports, first day of trading. Right now we have got Immerse Sports at $13.38 a share. They did begin trading this morning at $13.40 a share. Again, recapping, U.S. stocks higher across the board. S&P up 54, up 1.1%. 10-year, 3.85%. The 2-year, 4.19. Spot gold up 0.7%. $20.54 the ounce on spot gold. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Love is the drug, got a hook on me. Oh, catch that buzz.
All right, everybody, we got a lot to dig into with our own Ian King. First up, we do want to mention, I know Charlie's been on it, shares of Qualcomm, the world's biggest seller of smartphone processors, under pressure today, down about 5%, having their worst day since September. Company reported results late last night, or after the close, I should say. And although it's expecting a modest recovery for the industry this year, the market for internet-connected appliances remains sluggish, and so that's been a bit of a drag.
Okay, we got Ian King with us. He's U.S. semiconductor and networking reporter for Bloomberg News. He joins us on Zoom from San Francisco. Ian, good to have you with us. You were covering these. You wrote the story that we just referenced. Qualcomm shares down close to 5% as we speak. I thought the company met a lot of investor expectations. Why the sell-off today?
Yeah, I mean, there was nothing wrong with the numbers. They basically did what they said they were going to do and gave a sort of a range that was kind of in line with what people were hoping for. But I think contextually there was maybe a bit of hope there that the company would be able to say, hey, look, smartphones are back. Consumers are out there rushing to buy them. What's really going on is that this glut that we've had for this industry is over, that we're basically shipping chips to meet roughly what end demand is, and at the moment that end demand isn't coming flooding back. So people were hoping for a bit more of a spark on this, didn't get it, and that may kind of explain sort of why we are where we are today in the stock market.
My thought immediately goes to Apple,
yeah,
and what we hear from Apple after the bell today. Talk to us about what we can read into Apple ahead of Apple's results later, and then give us an update on the relationship between Apple and Qualcomm too, because I know that's very complicated.
Yeah, I mean, I think a lot of the focus on the iPhone is what's going on in China, and that was something that Qualcomm addressed, that this is the biggest market for this kind of devices, whether you're Apple, whether you're Samsung, you need to be there, you need to be doing well. Where are we in terms of what the geopolitical situation will allow? Are the Chinese flooding towards their local champion Huawei again? There were a lot of questions like that on the Qualcomm call, and they will be repeated in at least in people's minds today when we're looking at Apple. Apple needs to, I think, reassure people that we aren't kind of seeing this kind of great divide in the world's technology markets, and that China isn't moving away from them. I think that will be a focus. If they can lay that to rest, then we're back on, and I think a lot of people will be happier.
Hey, Ian, is there a net-net? We want to get into the story that we really want to focus on with you in just a moment in terms of AI and really the drug industry. But having said that, is there a net-net to take away from Qualcomm, AMD, ASML, which was upbeat to say the least, Intel, Texas Instruments? Is there some theme there that you have kind of put together in your mind in terms of what it says, again, about the cycle, which is something we'd love to talk to you about?
Yeah, I mean, at the risk of repeating, I think, conversations that we've had previously, I think it's reinforced what is different. I mean, we always say, everybody says it's different, and then it's not. Chips are up, chips are down. They can never get the balance between supply and demand right. And that's certainly been true again this time. What's different is that different end markets have kind of gone off the boil and come back at different points. In the past, it was a cavalry charge in, and then a huge, last one out, turn out the lights. This time it's different. You're having automotive just showing weaknesses. You're having these connected device market, obviously in the midst of weaknesses. PC has already kind of come back. Smartphone is already through the worst. So that's, I think, made it more difficult for our audience, for investors, to sort of pick winners and losers this time. And they've probably had to do a bit more homework and learn a lot more about some of these more obscure companies than they had done previously.
Well, and then let's pivot to, because this next company that I want to ask you about will definitely pivot us to the story that you have done with our Jackie Davalos when it comes to, not Jackie Davalos, forgive me, with our Naomi Kresge. NVIDIA, which doesn't report till February 21st, it's up 27% this year, right? The chip company that we look to when it comes to all things AI. Is NVIDIA, are we going to be disappointed potentially in terms of NVIDIA's results?
I mean, it depends what you mean by disappointed. I mean, all I would say would be look at what AMD did. They went out and put an extra $1 billion on their AI-related forecast, and it wasn't enough. Last time around with NVIDIA, they went out and wiped out forecasts yet again for the third time in a row, all based upon AI. It wasn't enough. So, you look at the numbers, and it's likely, according to what analysts are saying, that NVIDIA will be at the very worst there or thereabouts, arguably probably a lot better. Just how much better appears to be what investors are focusing on right now for all of these companies. We're not seeing any disasters. We're not seeing any nasty surprises, apart from in automotive earlier in the reporting rounds. So it depends on expectations. You ask investors, right?
Okay, well, sticking with AI, let's talk about this story that you and Naomi have for Bloomberg Business Week, because it's about how the pharmaceutical industry is embracing AI to turbocharge drug development. Over the past decades, investors have pumped about $18 billion into so-called AI-first biotech companies. That's according to BCG. And then also NVIDIA, that's where NVIDIA comes in, has for more than a decade been trying to persuade the pharma industry to embrace its AI chips. So Ian, are these pharma companies starting finally to embrace NVIDIA's technology, or are there other companies that we should be watching here?
I think so. I mean, that's why we chose to do this particular story at this particular point, because as you just indicated, Tim, this is something that's been going on for a while. I think the sense is that we are reaching a kind of a turning point in at least the willingness of the customers here, and the customers being those drug development companies and that drug development process, to look at technology as not just like your pocket calculator, which helps you, or your Excel spreadsheet, which kind of helps you to do what you're already doing in a more efficient way, but as a way to actually set the agenda and bring in new practices and new ways of doing things, which will arguably change the business. That's the argument.
Well, and what's interesting, and take us to Genentech, right? They actually have built their own AI tool, and it's called Roche GBT. Of course, Genentech's Swiss parent is Roche Holding, which is why it's called that. But talk to us about the work that they are doing, because they seem to be very much doubling down, tripling down when it comes to maybe the use of AI in their pharmaceutical process.
Yeah, I mean, the fundamental argument here is that these companies produce an absolute, mountain of data, making sense of that data, drawing out patterns, knowing what they don't know, connecting things that they wouldn't be easily to connect in an analog way is the end goal for everybody here. The argument is, well, if we can make our data more accessible, more addressable, if, for example, I can just talk to the computer and say, hey, show me a molecule that will do this, or that works in this particular way that might work in this way, that's a sort of giant step forward for how these companies go about what they're doing. And the argument there is that their processes are based upon FDA approval and an experimental approach, basically, which is, an incremental and careful approach, as it should be. The argument here is that at least at the beginning, we can take a much broader brush approach and get ideas that we perhaps wouldn't have had.
But we don't know whether or not these are more effective drugs at this point.
Yeah.
That's one of the most important things at the end of the day, Ian.
Yeah, no, this is the classic Silicon Valley versus the real world thing, right? That they see a large amount of data and think that they can throw more technology at it and get to a shortcut that makes the world a better place and everybody gets rich. They told us pretty much the same thing about self-driving, that robo-taxis would be on the road, would be all over the place, and that was supposed to have happened 2 or 3 years ago. When did you last see a robo-taxi, right? I live in San Francisco, so I see them, but they're still not commonplace. And it's, this sort of mashup of what you can do with data and how quickly you can move it forward with what happens in real world complicated situations. You don't get much more complicated than the human body, than human biology, all of the things that can happen, all of the environmental factors, genetics, all of these things brought together. Can we just throw that into a computer and come up with a pill that makes everything okay? Clearly, we're not even close to being there yet. Clearly, we're going to have to see a lot more work. So what we're really talking about here is, hey, let's make the discovery, the data mining portion of this a little bit easier, and then we'll take it from there.
Yeah, I think about when reading your story and Naomi's story about the assists that I constantly think about that a lot, about how AI can maybe assist us, maybe not replace us, but especially when you're talking about huge data sets. And as you said, nowhere does there seem to be as much data, maybe social media, but really in the pharmaceutical industry, right? They have just so much. So if you can use AI to kind of go through it and help humans in the process, you do think about, could this cut down drug development time? Even if you cut it by 0.25%, that could bring drugs, which could be very helpful potentially to individuals much sooner to marketplace.
Yeah, 100%. I mean, the development cycle of a drug from discovery all the way to approval is typically a decade, right? Or longer. Chip industry is like what? Come on, you can be much faster than that. What are you doing here? And clearly, if one can help the other move towards the speed that the other one works at, then that's a better thing, right? The end goal here is obviously you walk up to a machine, it looks at you and says, oh, you need this, and it dispenses a pill that's tailored not only to your treatment, but to you, right? Which, that's the end goal, but again, a lot of work to be done with that.
Yeah.
Ian, when is that a realistic goal for us to start thinking about? I mean, what's the timeline for something like that?
Yeah, I mean, at this point, we're looking at reducing the traditional development cycle from the decade to being measured in years. So clearly, going from that to individually tailored medicine to medical devices or pharmaceuticals that are tailored to an individual, not just a population or a specific years and years away.
And yet, take us back to, one of the things that we talk about, right? There's often benchmarks in terms of certain industries of different events that we focus on. And I think about the JP Morgan Healthcare Conference, right? At the beginning of the year. Tell us about who was really, a standing room only in terms of his presentations and what everybody was talking about at the event.
Exactly. I mean, you talk about these kind of aha moments, these Sputnik moments, whatever you want to call it. It was Jensen Huang, the CEO of NVIDIA, was there saying, hey, you should listen to me. He was being rude, as he kind of is, for jokingly with them and saying, look, you guys are too slow. You need to speed up. I can make the world a better place. And whether or not what he's saying is realistic in the here and now, it was. I think he was there to make a point and to get people focused on this. And this is something he's very good at, to get people focused on these things. So if they listen to him, and it would certainly appear that they did, and if they're willing to put money at it, that's good for NVIDIA, but it also could be good for us all if we do see a streamlining of this process and a move towards, what could be the future of medicine.
Ian, any other companies that could compete with NVIDIA in selling to pharmaceutical giants, just in the last minute that we have with you?
Well, as we've talked about over and over again, it hasn't escaped the notice of Intel, of AMD, and everybody else that one company is charging $50,000 for a chip that probably cost it $1,000, $2,000. So there are a lot of companies chasing this. A lot of companies want a piece of the action. Clearly, NVIDIA's in the lead right now, but there's no shortage of those who want to go after this, at least in my constituency.
Yeah, well, it's fascinating, and this is a pretty incredible read. We highly recommend everybody check it out at Bloomberg.com/businessweek or check it out on the Bloomberg terminal. Ian, thank you so much, as always. Ian King, he's U.S. Semiconductor Networking Reporter at Bloomberg News, joining us on Zoom from San Francisco, doing this story with Naomi. And as we said, you can find this story online. Fascinating, right? I just think about the customization of medicine we increasingly talk about, right? And we've seen this over the years. It's not like a new thing. But
Still
this idea
on
of one way of treatment, different diseases, there's variances, nuances, cancer, like all these different things. So if you can start to customize based on the type of illness that you've got, you think about maybe how that could be a better treatment.
Shares of NVIDIA up by 2.5%, Carol.
Yeah, they're up 27% this year. Again, number one performer in the S&P last year and a top performer already this year. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are looking at an up day on Wall Street with the Dow, the S&P, NASDAQ solidly in the green. 39 minutes to go until we get those mega cap tech earnings out of Amazon, Meta Platforms, and Apple will be all over those numbers as they hit the Bloomberg. Keeping an eye right now on Immerse sports shares. They began trading today at $13.40 a share. Right now they are at $13.24 on Immerse Sports, which owns brands that include Wilson tennis rackets and Solomon ski boots. Right now, S&P 500 index higher by 55 points. A rally underway here, rebounding from yesterday. The Dow up 332, up now by 0.9%, while the NASDAQ Composite Index is advancing right now by 190 points, up by 1.3%. 10-year yield 3.85%, with a 2-year that's yielding 4.19%. Spot gold up $14 the ounce to $20.54, up 0.7%, while West Texas Intermediate crude just above $74 a barrel, 74.06 right now on WTI. It is moving lower by 2.3%. So an earnings palooza after the closing bell. We've got you covered, and to cap a busy week for markets, we got that jobs report tomorrow morning, 8:30 a.m. Wall Street time. Julia Pollack is chief economist at ZipRecruiter, and she sees job growth slowing.
The 3-month average right now is 165,000, and I think we could even fall below that. So I think the risk is very much to the downside. Job growth has been slowing and narrowing over the course of the year, and I think it'll continue to do so as long as rates hold steady at these restrictive levels.
And you can hear more of the conversation on the Tape podcast. You can download it wherever you get your podcasts. Peloton Interactive shares plunging today after the company said it expects to record another sales decline in the current quarter. Peloton shares, they are moving lower now by 23%. Recapping, stocks higher ahead of earnings after the bell. S&P back above 4,900, up 55 right now, up by 1.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, it is indeed. All right, Charlie Pellet, thank you so much. Well, we just finished up January, and even after yesterday's sell-off, both the S&P 500 and NASDAQ 100 were up by more than 1.5% for the month overall. Bitcoin, too. We've been watching this pretty closely.
Yeah, ended the month flat after coming back to earth from that spot ETF frenzy earlier in the month. So we wanted to check in on how retail investors are feeling about all this. What's their sentiment right now? So we've got the perfect guest. Lule Demisay is U.S. CEO of the retail investing platform eToro. She joins us on Zoom from Hoboken, New Jersey. Lule, good to have you back with us. You joined eToro back in 2021. We've spoken to you a few times since then. That was the height of the pandemic-driven retail investing boom. Talk to us about what you're seeing on the platform right now compared to what you were seeing back then.
Yeah, I mean, definitely the froth of what's back then sort of has definitely left us. And at that point, you know, what hindsight taught me was that I thought the retail investor was going to be scared off with, you know, a bubble bursting, high interest rates, inflation around the bend. And what's really been interesting in these last 2+ years that we've seen is the resiliency of that investor. They started off at the peak of 65% of households and are keeping it around 63% now, and leaning into a lot of what you would think are risk-on investments in this environment.
Hey, help me out there. And maybe I just need another cup of coffee. But those percentages, what does that represent, if you would?
Percentage of U.S. households, individual households that are participating in the retail sort of investing markets right now. So at its peak, it was about 65%.
Right.
During the COVID era, and it's persisted in the mid-60s till even now.
Talk to us.
That's so high. That seems so high to me.
Well, talk to us about the demographics. I'm always interested when you've got a big number, but you dig down into the data set. So who exactly is making up that percentage base?
So in terms of the percentage base, it could be households that are, you know, ultimately that are partaking through their 401k, through their IRAs, through a brokerage account. But ultimately what we do is also to break that down. We do a survey every quarter on retail investors. And what you find in that retail investor base is, for example, when I said risk on, you know, more than 57% are participating in AI-related stocks. Retail investors, some way or fashion of AI-related stocks. Similar to crypto, about 20% of their portfolio is made out of crypto. The
20%?
younger you go, the more. Yeah. The younger you go, the higher you see that percentage. So the younger you go, obviously, time is on your side, and so you're able to take on risk on. What's interesting is they're doing it even now in this environment. And it's not that dissimilar to what we're seeing in the marketplace right now.
I do wonder if it's also, you know, a younger generation. I mean, Matt Miller aside, not that you're not young, Matt, but Matt Miller aside, like using ChatGPT and be like, I get it. Like, this is kind of fun. And so I always think of Peter Lynch way back when, a Fidelity, like, thought about how, you know, kids, like, you understand something, invest in the things that you understand. And I wonder if that's what's going on, essentially.
Yeah, you know, you took me back to the Magellan Fund. Yeah, no, for sure. Part of, you know, but what's interesting is, you know, when we had the 2008 crash, the younger generation actually left the marketplace.
Right.
They were scared for like 10 years. And they came back really when investing became more prolific through mobile apps and other things. This time around, they stuck around. But you're absolutely right. They lean into technology. So whether that is that high percentage of AI investment that I told you about, crypto, or leaning into AI as a mechanism to inform their investment thesis, you see that more and more with the younger generation.
Hey, Lule, what I wonder too, though, in terms of demographics, digging even a little bit deeper, about the people using your platform predominantly. Who are they? What are they? Give us some details if you can.
Yeah, so they look very much like the people we survey on a quarterly basis. So our platform, over 55 to 60% of it is millennial or younger. And then the tail ends are really sort of like Xers. So we represent what I call like tomorrow's investor today. So our investors look very much like the people we survey. And more women are participating as well. When you look at the demographic shift, you see year over year, more women are taking on AI-themed investments than there are men.
Can you talk a little bit about that? I mean, we'll get to the AI part of it in a second, but do you see women participating more overall on the platform now than they have in recent years, AI notwithstanding?
Absolutely. Whether that's the kind of investments they hold, whether it's crypto or AI or stocks or technology stocks.
What's the gender breakdown?
So overall, typically in America, what you find is that in just regular stocks, women and men have become sort of like a 50-50 parallel, right? But when you go into like a little bit more complicated investment strategy,
we're having some technical difficulties with Lule Demase right now, the CEO of eToro US. But we're going to get back to her in just a minute. I do have some stats here, which I think are really interesting because they did this quarterly survey at eToro. It's called the Retail Investor Beat. It measures investor sentiment, activity, perceived risks to portfolio, and more. And what they found is that 65% of younger investors, those are 18 to 34 years old, have exposure to AI stocks. It's the highest among all age groups surveyed.
Yeah, so 58% for 35 to 44-year-olds, 37% for 45 to 54-year-olds, and about 9% for investors aged over 55.
All right, let's get back to Lule Demase, the U.S. CEO of the retail investing platform eToro.
AI is going to fix that, Lule. Yeah. We know that in the future. We're banking on it.
But you were telling us about
never change your Wi-Fi provider before you do a Bloomberg.
Deal, yeah.
Hey, you were talking about the gender differences that that you're seeing right now. You said it was half and half when it comes to overall stocks, but then you got cut off when you were talking about different types of stocks.
No, like the more complicated strategies where you see more retail participation, like options, for example, is a good one, right? You actually see more participation now in options than you did even during the pandemic era, which is kind of like counterintuitive. Women are still underpenetrated in those kinds of things. But when it comes to technology, they're going toe-to-toe with their counterparts, especially when they go younger women. Younger women are starting to close that gap faster than maybe sort of like, Gen Z, the Gen X and older generation.
Is there anything in terms of the trends that you are seeing on your platform specifically that give some kind of indication of maybe an overheated market? We've had quite a run-up, bounce back from the lows in October. Some would say we're just still kind of catching up ground over the last couple of years. But having said that,
would say potentially irrational exuberance.
Exactly. So is there anything that you see when I hear like you're doing surveys and it's all about, everybody kind of channeling money into AI? The big mega cap tech companies this week have been disappointing on the AI front. We'll see what we get today after the close. But what does it tell you about kind of the macro investment environment? Overheated, irrational exuberance, or no?
I think that it's too early to say irrational exuberance. We're still coming out of a winter on so many levels. And there's a lot of diesel, and whether it's lower interest rates, that's the potential, or a soft landing, that I think it would be too premature to be talking about overheating. And what you do see on our platform, by the way, is people still partake in cash, for example. They keep powder dry. When they tell us what they're about to invest in, they say a good part of it is going to be holding powder dry in cash, because they're not stupid. They're getting their interest rate as well. So I would say it's not so much irrational exuberance as you see more people realizing that technology over and over again, outside of like some of the bubbles that burst, keeps outperforming other sectors. Whether that's technology,
we only have like 30 seconds left, but I want to know about that dry powder and at what interest rate you think it'll go back into the market, and where it goes. Does it go to fixed income or does it go to equities?
For a lot of the generation that we have, it's a lot of cash, right? Because why would you go into a more complicated instrument when risk-free investments are giving you 4 to 5% interest? So a lot of them are holding it in cash with high interest rates that are available to them. So I don't think that that's necessarily going to change as much as perhaps interest rates going down and then deciding that they're going to go higher risk.
Right. Well, we talk about that kind of record, $6 trillion
money market,
sitting on the sidelines and essentially cash, right? And everybody keeps saying when they come back to the markets, what kind of momentum that would provide, provided they come back to the markets and investors are willing to take on a little bit more risk. Lule, so glad that we got to get some time with you on this Thursday. Lule Demose, she is U.S. CEO of the retail investing platform eToro, joining us on Zoom from Hoboken, New Jersey.
Hey, let's get a check on latest world and national news. For that, we go to Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Hey, Tim. Well, there appears to be some light at the end of the tunnel in the Senate, where negotiators on both sides have been working on a deal that would pair foreign aid to policy changes at the southern border. Senate Majority Leader Chuck Schumer sounded optimistic during a floor speech today.
Conversations are ongoing. Some issues still need resolution, but we are getting very close on the National Security Supplemental.
Schumer says the text of the proposal will be ready no later than Sunday, with a vote planned for midweek. While the U.S. continues to work on that bill to provide more aid to Ukraine, today European leaders struck a deal to send $54 billion to Kyiv. Ahead of today's vote, Lithuania President Gitanas Nausėda spoke of the need to support Ukraine.
Ukraine, this is just the first defense line. So this is very important to keep this first defense line strong.
Lithuania's President Nausėda, the EU deal was approved only after Hungarian Prime Minister Viktor Orban lifted his veto. There were an estimated 20 million new cancer cases and close to 10 million cancer deaths in 2022. That's according to new estimates by the World Health Organization. And new projections for 2050 have been released. This is Dr. Freddie Bray, branch head of cancer surveillance at the WHO's International Agency for Research on Cancer.
We predict, based on the projected changes in population growth and aging worldwide, there will be over 35 million new cancer cases by the year 2050, a 77% increase from the 20 million estimated in 2022.
Bray says the majority of diagnoses are expected to be in low-income countries, with mortality seen as doubling. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street from Bloomberg World Headquarters. I'm Charlie Pellet. Those earnings are going to be coming fast and furious, and we've got you covered. Stocks right now, S&P best level of the day. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks with a strong bid today after yesterday's sell-off, with the Dow currently up 350 points. S&Ps are higher by 60, while NASDAQ is up by 1.7%. The U.S. 10-year yield at 3.86%. Gold is up 15, oil trading in the red, but Bitcoin is higher by 1.6%. All the main 11 S&P sectors are trading in the green, led by gains in consumer discretionary and consumer staples. Leaders to the upside in the Dow, Merck and Walgreens, while Honeywell fell 2.9% after earnings and led to the downside. Also after earnings, C.H. Robinson fell 13%, Aflac dropped 10%, and in deal news, Cliff's CEO said the U.S. Steel offer is absolutely gone. In other news, the New York Community Bank Corp fell as much as 15% and traded to its lowest level since 2000 intraday. And wrapping things up, you mentioned the tech earnings. Apple, Amazon, and Facebook all report after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, I thank you very much, Bill Maloney. We love earnings season. We'll be all over those tech numbers as they break. And to hear live breaking news over your Bloomberg, type Squawk, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, we're just about 17 and a half minutes away from the closing bell on this Thursday. We've got equities. You just heard Charlie breaking it down. We were near our highs of the session. Some buying here in the last 20 minutes or so. We're up more than 1% on both the S&P and the Dow.
Jay Powell was like, didn't you guys hear me yesterday? Did you not hear what I said?
Maybe this is what we were just talking with our Bill Maloney off air, that I felt like he was very clear. He's kind of laid out a path for us, and maybe it's not going to happen in March, but I feel like we're getting, he did say peak in terms of this cycle.
Okay, I'm going to see what Liz Ann Saunders has to say. She's Chief Investment Strategist at Charles Schwab. She joins us on Zoom from Naples, Florida. Liz Ann, always good to chat with you. What do you think of what is going on in the wake of yesterday, what we heard from Fed Chair Jay Powell? Was he clear?
I think it was incredibly clear. And I think, by the way, he was trying to be clear even before the meeting. We were not expecting that March would be the start to cutting, and we're frankly somewhat surprised at how high probability stayed even heading into the meeting. But I think he was very clear, and he wasn't just clear by essentially. I mean, it did take till 3 o'clock Eastern time for him to say essentially a March cut is off the table, but you could infer it prior to that. But he was really clear about what specifically they're looking for. He talked about the aggregate of inflation numbers versus the goods versus services. He talked about the labor market, part of their dual mandate coming into clearer focus in terms of the reaction function to move to cutting. So it wasn't just clarity on the start point, not being March most likely, but clarity on what they're looking for. So it wasn't surprising to me. The reaction by the market was a little surprising.
All right. So, Liz, great to be talking with you again. I'm curious, is there enough enthusiasm out there and fundamentals to keep the equity side of things moving higher? I mean, Fed Chair Jay Powell several times made a point of, hey, guys, this is a good economy. People are working. We've got growth. How do you see it?
Well, I think an environment in which the Fed would start cutting in March, or if they do, if there are conditions that suggest they actually do have to cut in March and they go against what they suggested yesterday, I'm not sure that's something you would want to wish for, because it would suggest much more deterioration in the economy, probably specifically in the labor market, which then, pulls into the discussion, the earnings backdrop and the profit margins backdrop. So I think a later start, all else equal, is better. I think we may be in an environment where even on days like yesterday and the indexes get pulled down because you get some of the mega cap leadership waning, I'm focused at least as much on what's happening under the surface of the indexes. I think we could be in an environment somewhat similar to what happened into the lows of October 2022, where you were getting profit taking up the cap spectrum. It was weighing down the indexes, but you were seeing broader participation under the surface. That's in technical terms called the positive divergence. So much like things like jobs reports that come out, I think you have to look under the surface to get the real story. I think you have to look under the surface of these cap-weighted indexes to get the real story. And a continued broadening out, lower correlations, broader dispersion, all else equal, I think, is a better backdrop.
What happens to equities when the Fed actually starts cutting rates, Lizanne, cutting rates? I'm wondering if it's all priced into the market right now, or if as soon as Jay Powell says at that first meeting, when they're cutting, we see the floodgates open.
Well, there's no typical behavior of the market, depending on what point you're talking about in the cycle. There's a really wide range of outcomes. Once you get to the cutting part, what tends to be a differentiator as to whether you have a better market environment or a worse market environment is, number one, the reason why they're moving to cutting and the speed with which they have to cut. Obviously, cutting because they're trying to pull an economy out of recession is very different than if they're cutting with growth hanging in there simply because real rates have gone up in the throes of disinflation. That would be best case scenario. So it's the why, not this definitive. Once they start cutting, it's sort of a universal move higher by the market. History has shown it can vary quite a bit. So I think it's going to be the why. I do think that this is an opposite cycle. It's always been said that the Fed takes the escalator up when they're hiking and the elevator down. I think it's the opposite this time. They clearly took the elevator up with multiple hikes of more than 50 basis points. I think the inclination at this point is to be more escalator-like on the way down.
I love that. What I want to ask you, though, speaking of things being down, though, what's going on with community banks, and in particular, our focus on New York Community Bank Corp. It's down, I think, about 44% in the past 2 days. Concerns about commercial real estate, higher loan loss reserves. KRE is down 2.6% today. Do you think it is likely we will see other regional banks come under some troubles?
Probably, but I think this is more of a simmering problem over time, or a slow motion train wreck, whatever analogy you want to use. It doesn't appear to be something Lehman-esque, like where there's some announcement or some loss that's going to trigger the implosion of the financial system. We are talking about exposure, obviously, that's much more concentrated in the small and regional banks. In the case of New York Community Bank Corp, obviously you had that elevation once they bought the assets of Signature up to a different regulatory structure, and now they're dealing with the commercial real estate problems. But even within commercial real estate, it's obviously a very broad category, and I think as an analyst you have to have a fine-tooth comb when you're looking regional bank to regional bank, small bank to small bank, to see what type of commercial real estate exposure do they have. Is it more office concentrated? It is in other healthier areas of commercial real estate. And then, of course, what the maturity schedule looks like and the strength and health of the balance sheet. So I don't think you can look at this monolithically, maybe like you could the financial system during the sort of Lehman failure 08 period of time. But that's not to suggest the problems aren't still through the windshield and not in the rearview mirror.
All right. So as you mentioned, opportunities, do exist outside of the mega cap favorites. Having said that, we're uber focused, Lizanne, on it with Apple, Amazon, and Meta getting ready to report. Do you have a general call on some of these Magnificent Seven tech names? Is it still
I don't
important?
have a call on what they're going to report, but the earnings reports are important. The outlooks are important because, the consensus for just Q4 is that the Magnificent Seven will have had more than 50% earnings growth. In fact, if you X out the Magnificent Seven's earnings growth from what's expected for fourth quarter, you go back into negative territory. So it absolutely matters individually for the stocks and in the aggregate. But, I don't have perspective on whether one or both or all three are going to sort of beat numbers. But it's absolutely a big factor.
No. And forgive me. What I meant is in perspective in terms of investors having exposure, and just got about 20 seconds left.
Be careful about that concentration because, many funds can't even own as much as they represent in the indexes. I think there is concentration risk. That doesn't mean don't have exposure, but be mindful of having exposure in other quality segments of even cap-weighted indexes.
All right. Well, so appreciated as always. Liz Ann Saunders, she's Chief Investment Strategist at Charles Schwab, joining us on Zoom from Naples, Florida. Just about 10 minutes left in the trade, folks. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet, and we are minutes away from big tech earnings from Apple, Meta Platforms, and Amazon. Mandeep Singh is a senior technology analyst with Bloomberg Intelligence.
In the case of Amazon, clearly all eyes are on the AWS growth number, which is decelerated sharply if you compare it to Microsoft Azure at 30%. We are comparing it to 12 to 13% growth for AWS. And in the case of Meta, I mean, look, this is a company that had almost an 80% drawdown, reclaimed its 1 trillion market cap, and now everyone is expecting, they have course corrected. Metaverse has become a sideshow, and they're pivoting to AI, which they have.
And then there is Apple, which is looking to avoid a fifth straight quarterly sales decline. Alex Webb is a columnist with Bloomberg Opinion.
They find a way, even as the top line numbers slow, of leaning more into the high margin products. So if you're selling the iPhone you want to be selling is stuff with a lot of memory, because the margin on memory, really, really good. If you're experiencing growth in your services business, that's things like the App Store, where it's basically software and very high margin. Things like iCloud, all those sort of things, they really managed to squeeze the profit out of sort of every last dollar. And, it's very much Tim Cook's Apple.
And that's Bloomberg's Alex Webb. So right now we've got Tim Cook's Apple up by 1.2%. Amazon higher now by 2.3%. And Meta Platforms ahead of earnings up now by 1.2%. Again, all of those coming up after the close of trading. A headline from the Bloomberg Professional Service: money market fund assets have reached $6 trillion for the first time. And those are some of our top company stories at this hour. I'm Charlie Pellet. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. I'm Tim Stenivek, and that's Carol Masser. February is Black History Month, and every day this month we are celebrating significant moments in U.S. Black history. Now with your installment for February 1st, here's Bloomberg's Justin Milliner.
Thank you, Tim. We start with a pretty big one. On this day in Black history in 1865, President Abraham Lincoln formally abolished slavery by signing the 13th Amendment. Today, that act is acknowledged with National Freedom Day. President Harry Truman signed that into law nearly 100 years later. Truman was the first president to address the NAACP, and in his remarks, he spoke in pretty plain terms about his support for civil rights.
The way ahead is not easy. We shall need all the wisdom, imagination, and courage we can muster. We must and shall guarantee the civil rights of all our citizens.
While it was President Truman who officially signed the National Freedom Day into federal code, it was the work of many others, including a former slave who helped it gain traction. Richard R. Wright was just 9 years old when the 13th Amendment was signed. He went on to become a celebrated author, a civil rights advocate, and the first president of the first public, historically black college in Georgia. His advocacy and lobbying for National Freedom Day was instrumental in it being officially recognized. And that's today in Black history. I'm Justin Milliner. Now back to you, Carol and Tim.
Yeah, really important, right, in terms of what he was achieved.
Yeah, I mean, it's incredible. And the fact that he was alive when slavery was abolished and able to kind of push things forward, it's crazy to think about.
Well, you think about what he experienced, right, in terms of that time frame.
in his life. Yeah, from being someone who, in theory, his family members were slaves, his grandparents, his father.
We think of this stuff as history, but if you think about it from a generational perspective, it wasn't actually that long ago.
No, it really wasn't that long ago. I mean, we see black and white pictures of things like that from the 60s, but that civil rights era, that was not that long ago, where we have, anecdotally, my father grew up where there was Jim Crow laws. He was very little, but he was alive where Jim Crow laws were in effect in the South. So this stuff seems like history, and it is history, but it's a lot more recent than we think. And that's a pretty good example, Richard R. Wright, being a person while slavery was in effect, and then growing up, being able to, exist and help. Do all sorts. He was an author and everything.
It's remarkable. It shows that change can happen. Doesn't feel like sometimes fast enough, but nonetheless. Justin, thank you so much. All right, folks, over to our TV colleagues. Time to talk about the markets. Beyond the Bell. It starts right now.
industrial average looks like it's going to finish out the day higher by about 1%. The S&P higher by about 60 points or 1.25% above Alex Steele, that round 4,900 level, 4,906. I don't have a hat for that.
I heard you were obsessing on that before.
No, we just like our round numbers here. We just feel good about that.
Well, speaking of round numbers, take a look.
I'm not finished, Carol Masser. I'm not your brother.
Come on, buddy. We got earnings.
The NASDAQ composite up 1.3%, and the Russell 2000 up 1.4%. Carol Masser, take it over.
Get it done. Get it done. S&P 500. Speaking of round numbers, well, not quite round, but a lot of the S&P 500 higher today. Scarlett, 401. I'm looking at right now as the market settles at 101 to the downside, 1 unchanged.
Yeah, and when you look at the sector performers too, 11 industry groups, 10 of them are in the green. You've got consumer stocks, whether it's consumer discretionary or staples, up by at least 2%. Utilities also up by 1.9%. Though a laggard here is really energy, and that's little change at this point.
All right, let's get to some of the individual gainers as we await those earnings. Immerse Sports, actually, let's go to Amazon, folks. Here they come. All right, fourth quarter AWS net sales. Actually, let's go to the big numbers. Fourth quarter EPS, $1. Big beat, folks. 78 cents a share was what the street was looking for. Looking at first quarter net sales, so we're starting to go into the outlook here. $138 billion to $143.5 billion. A little bit of a range there. The estimate on the street is $142.01 billion. As for first quarter net sales, again, we just did that one. First quarter operating net income, they're looking at $8 to $12 billion. Again, quite a range. Estimate on the street is $9.12 billion. We're looking at Amazon up about 2.3% in the aftermarket. Operating margin 7.8%. Another big beat. Estimate is 6.17%. So AWS net sales $24.2 billion. Estimate was for $24.22 billion. That's always an important one. And physical net stores net sales 5.15, 523 is the estimate. So that's a little bit light, but we're seeing the stock now up about 4%. Looking pretty good, guys. Alex, at least in the initial go through.
Yeah, I was taking a look at what they said about China in their press release, talking about expanded tools and resources for sellers in China, talking about supply chain by Amazon for sellers in China, so less competition and more about their ability to capitalize on that. But Tim, you know, the range from net sales to operating income for the first quarter is quite wide. I don't quite know how to read that, to be honest. I mean, clearly the market's taking it positively, but still.
Yeah, and look, I'm going through the press release right now, and I see what Andy Jassy said. It's incredibly long, and I'm going through it. What sticks out to me is what he says about AWS. He said its continued long-term focus on customers and feature delivery, coupled with new Gen AI capabilities like Bedrock Q and Trainium, have resonated with customers and are starting to be reflected in our overall results. Lots of questions are going to come up today from analysts about, okay, what are we seeing in the results specifically from using those new generative AI capabilities?
I think one number that really jumps out at me, and one reason why you might be seeing the shares higher, are really some of these cash flow numbers. I'm not exactly sure what the secret sauce was, but you're right now talking about inflows on free cash flow of about $37 billion in the full year, I should say. So for the full 12 months, that compares to an outflow of about $12 billion in the previous 12 months. So that's a huge flip-flop. And even on the operating side, that cash flow increase was still at about 82% higher than what it was the prior year here. So maybe that has to do with some of the cost cutting that actually led to that big beat on that side.
You know, some analysts were saying that the best case scenario for Amazon here is a retail revenue beat, and we got that with online stores net sales, a margin beat, and it looks like we got that as well. An inline AWS revenue is slightly lower than what analysts were anticipated, but certainly growth from the previous year, and commentary suggesting Amazon Web Services accelerating in the first quarter. So that's what we're going to be watching for in the earnings call.
All right, so just to rehash here, folks. So we've got Amazon, up about 3.5%, 3.6% here in the aftermarket. You got first quarter operating income $8 to $12 billion. The estimate for $9.12 billion. Again, AWS fourth quarter AWS net sales $24.2 billion. The estimate was $24.22. So essentially in line. But again, the investor enthusiasm, Alex, with this one continues. And I agree, those numbers when you look at cash flow, pretty tremendous that remain pointed out.
I just want to point out, guys, something about Amazon Prime. This is the second quarter that they've had their Thursday night football, and we're looking at 24% year-over-year, double-digit growth for second season in that 18 to 34 demographic. That really paying dividends, no pun intended, for them. Netflix also getting into this game as well for WWE, and that's quite interesting that they're also able to capitalize on that too.
I'm glad you brought that up because something that investors have been really excited about is advertising, what Amazon is doing with advertising. If you're a Prime member, you notice that Amazon recently turned on ads, Romaine, for your Prime viewership, and you have to pay a monthly fee in order to turn those off. Amazon a huge player when it comes to advertising now.
Yeah, they're certainly a huge player when it comes to advertising. And I think this idea, though, Tim, this idea that they have made that switch, and at least so far, you have not necessarily seen any real ding to that side of the business. But it also gets to the point that this isn't sort of a one-to-one comparison with Netflix. Remember, I mean, Prime isn't their primary business. It's really just an ancillary add-on here.
You mean Prime Video?
Prime Video, you're right, to sort of keep people attached to it.
Exactly. I mean, Prime is so important to Amazon because if you subscribe to Prime, you buy more stuff from Amazon, you pay more, you shop more, and you pay more for items. So, I mean, if you're in the Prime universe, it's like the more valuable they can make it, the more likely you're going to stay.
Yeah,
it's a virtuous cycle, right?
All right, I think we're actually getting results out of Meta. So let's get to that right now. Meta Platforms, monthly active users coming in at about 3.07 billion. The street was looking for about 3.06 billion on that number here. Not really seeing the fourth quarter numbers just yet, but here's your forecast going forward. 1Q revenue, the company sees $34.5 to $37 billion in revenue. The low end of that range is well above the street estimate of about $33.6 billion. So this looks like a big guide forward here on the revenue side for the company. Again, still digging around for the fourth quarter numbers, but the first quarter forecast, Scarlett, right now looking pretty good.
And also Meta has declared a dividend, a cash dividend of 50 cents per share. Are we in a new world where growth companies pay dividends? What happened?
That is unusual. You know, what's interesting too, Meta, we were talking about it before we got going, has been such a big outperformer this year. Among the Magnificent Seven. Meta's up about 12% year to date. You've got Apple down about 3%. Amazon, just up a little bit. But it's interesting to see them pay that dividend.
Okay, well, let's go through some of the 4Q numbers here. EPS 533. The street was looking for 491, so that's a beat. 4Q revenue coming in at $40 billion and change. That's a beat versus street estimates of about $39 billion. And then here is the two interesting stories here also coming out of it. The cost side here. They're giving a read here on their total expenses for the current year, $94 to $99 billion. The street was looking for, Alex, $97 billion.
Look at that buyback.
50, yeah, go ahead.
Announcing a $50 billion boost in their share buyback. So they are really giving a lot to investors here.
Yeah, it's a lot of cash to deploy. And I mean, you wonder, because one of the big stories when it comes to Meta, of course, is that it wants to continue investing in its new technology, in AI, in the reality labs, which hasn't been making money, but at the same time,
Still didn't.
But so far, as we know, over the past year, it's been rewarded tremendously for all the cost cuts. How does it balance that? And it's giving back a lot of money to shareholders.
So is this a company that, I know it's still called Meta, but is it still a metaverse company, or is this a company that's back to its basics and it's investing instead of in AI rather than in the metaverse?
Well, if you look at the share of revenue they got from ads, I think it's still an advertising company.
I think so too.
But no.
What a difference though 24 hours makes. Meta's up about 8% here. We're looking at Amazon at 4%. We're waiting for Apple, right? Compared to some of the other big mega cap tech that we got earlier in the week, it's a mega different tone, don't you think?
Absolutely. Amazon up 4, Meta up 8, and more headlines on Meta, Carol, as we say goodbye here, that they're going to continue that cost cutting here and our current hiring underrun.
All right, we know you guys will continue to cover our cross-platform ends, radio, TV, YouTube, Bloomberg Originals. Guys, we will see you again tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
I'm just going to say, whoa, what a difference 24 hours makes, or 48 hours. Because, again, just to rehash as we did on our way out with our TV colleagues, you've got Meta up almost 9% here, Amazon up about 4% in the aftermarket. Very different, as we were breaking earlier in the week, Microsoft and Alphabet, right? It was just very, very different.
Yeah, Meta boosting its buyback by $50 billion.
Massive.
Sees first quarter revenue between $34.5 to $37 billion. The estimate was for $33.64. Paying a quarterly dividend of 50 cents per share, so returning money to shareholders. Carol, it's pretty remarkable to see. I want to get to James Chalkmark. He is a partner and technology analyst at Clockwise Capital. Look, we have Amazon results, we have Meta results, we're getting Apple later. James, this is a pretty blowout quarter for Meta Platforms. That's where I want to start. What sticks out to you?
Is that the cost advantages that we saw over the last year that they've been implementing are more sustainable than people expected. Obviously, the top line is firing on all cylinders, really not seeing any kind of cyclical impact to that business as of yet. But all told, the earnings picture looks a lot stronger, and I think you're going to continue to see productivity improvements operationally to boost earnings as we go forward.
All right, flip on over to Amazon. We're just doing a quick touch first initially on these two. Amazon's up about 3.3% in the aftermarket as well. What is it that kind of impresses you about their release here?
Yeah, I mean, the main thing is on the improvements in the margins. I mean, this is something that they've been working on for the last year, really getting logistical efficiencies and optimizations and leveraging the AI to add predictive supply to different regional fulfillment centers. So that's all playing out. The one question that we had going into this quarter was how much of that bore fruit in the fourth quarter, because they're kind of first big holiday quarter with the optimizations in place. So we were unsure about that, but more so optimistic on the go-forward outlook. But I think you're going to continue to see momentum. I mean, this is a company that's, over 50% of every new dollar that goes online, they capture. Wow. They have all these new levers with, advertising. Now they're the third largest ad platform in the world. And, a lot of these things aren't talked about. The revenue that's going to flow through on the ads that are placed in Prime Video are just going to trickle down to the bottom line. So you have so many levers in this company. You really want to look at it more on a sum of the parts basis, obviously, but the street doesn't do that. On a sum of the parts basis, AWS by itself is over $1 trillion.
We want to go back. No, go ahead, please.
Yeah. No, I mean, so basically, this is a company that we think has a tremendous amount of optionality potential to it. So the way we invest is how predictable is the revenue and margin outlook, and how much optionality is priced in or not priced in.
I know.
So based off of that, Amazon's right up there.
I know all of these, we lump all of these mega cap tech companies often together, but they're not apples to apples. Sure. I get it. But it just seems such a different tone here, watching how the shares have reacted right after earnings. You've got Meta and Amazon shares soaring, yet I go back to Microsoft and Alphabet earlier in the week. What's the difference? And again, not apples to apples, but I'm curious how you are thinking about this sector overall and these names.
Yeah, I mean, the so-called Mag 7, we kind of view it as just three companies now. It's Microsoft, it's Amazon, and it's Meta. The other ones, we are overweight those names and underweight the other four. Because at the end of the day, it comes back to the predictability and the optionality. Now, Microsoft, I think, was just a bad luck with a bad tape. With Powell certainly didn't help yesterday. So I think that wasn't a warranted kind of reaction. They should have been flat to slightly up. But Google, they're a mature company. You're not seeing the growth levers as strongly as the other three.
Hey, James, to Meta Platforms briefly. Is Meta Platforms still a metaverse company, or has Mark Zuckerberg decided, okay, we wasted enough money on the metaverse and we're investing in AI in our core product?
Yeah, I think it is. I think the world is moving in that direction. I'm optimistic about it as an investor.
The metaverse?
Slightly worried about it. As an investor, I'm optimistic about it, but as a constituent and citizen, I'm nervous about it.
The metaverse, that is, right? I just want to make sure we're talking about the same thing.
Metaverse. Okay. Yeah, living in a virtual world, never meeting people again, basically.
Yeah, I would miss you if that happened. But you're not concerned about it as an investor. You think that the money they're spending on the metaverse is the right direction.
Yeah, as long as it's a predictable value. If we have, they increase their investments by 10x out of the blue, obviously that throws a wrench in our assumptions. But as long as they're investing steadily and in a measured way, I think it's improbable that the world does not go in that direction. And and they're at the forefront of it. Obviously, it's going to take time, but who better to be ready for it than Meta?
Hey, listen, I got to mention, because this is just crossing too with earnings, Microchip Technology, of course, a semiconductor device company, and this one is dropping in the aftermarket. It is down about, let me just bring it up here for everybody, down about 3% here, and this is what the company is saying. First of all, it sees fourth quarter adjusted EPS 46 to 68 cents a share. You could drive several trucks through that. The estimate on the street is way above that 92 cents. It says it's going to have 2-week shutdowns in fabs in the next 2 quarters. So we talk about cycles. So it sounds like some shutdowns there. Fourth quarter net sales, $1.23 billion to $1.43 billion. That too is quite a range. The estimate on the street is above that at $1.67 billion. I just wonder if you have some thoughts on the chip sector, which we keep, it feels like it's piling on some of the negative tone here.
Sure. I mean, our top ideas right now are NVIDIA and Supermicro.
Supermicro's been on a fire for several years.
I mean, we bought that at 283, so I can't complain. The fact of the matter is we kind of look at this AI and this whole semi market in 3 buckets. Bucket number 1, which is the most near term and the most resilient and robust growth, is going to be AI infrastructure, building out the data centers, the servers, and all the components that go into it. All the CapEx that we talked about, all the fears with Google, Amazon, Microsoft spending on CapEx, these are the companies that are supplying that. So that's what the second tier is, the companies that help you design the chips and adapt those chips to AI, like a Synopsys. And then the third tier would be the software, AI-based software services like a Snowflake. So we're leaning heavily into the AI infrastructure side of things, and we think that the other part of the semi market and AI software market will be more of a 25 story.
All right.
Go ahead.
Well, I was going to say, do not go anywhere.
I was just going to give an update. I mean, Meta Platforms up 12.5% in after hours right now. Still waiting on the call here from Mark Zuckerberg and other executives. Shares of Amazon right now up by 3.8%, and we're still waiting Apple to report.
I got to say, on Meta, I'm looking at our live blog that's breaking it down. Kurt Wagner, who follows a tech reporter, he says, how efficient was the year of efficiency for Meta? He says headcount was 67,317 as of December 31st, a decrease of 22% year over year.
It's a pretty good way to get earnings up.
Bringing it down, and that buyback, additional buyback authorization of $50 billion, and then also tossing investors a dividend. That is pretty remarkable in terms of Meta. And as you said, just taking off like a rocket in the aftermarket. Meta continuing to soar up
12%.
12% here. And then Amazon, forgive me, also up about 4% in the aftermarket. And that has to do with some of the outlook it has that company put out there. First quarter net sales, they're looking at 138 to 143.5 billion. The estimate was for 142.01. So, and profit also, their projection topping estimates on further cost cutting. So, year of efficiency for a few players there. We're going to come back with James Chakmak. Do not go anywhere, Mr. Chakmak.
And Apple's coming up still.
Yeah,
don't forget about Apple.
We haven't even covered that. Microchip, though, chips are down.
From Bloomberg World Headquarters, I'm Charlie Pellet. Big Tech gets a big boost after hours. Meta Platforms up by roughly 12% right now. It gave a forecast for revenue growth in the current quarter that beat analyst estimates, signaling continued strength in the digital ad market. Amazon also reporting strong profit and gave an operating income outlook that surpassed estimates, suggesting CEO Andy Jassy's unrelenting cost-cutting and focus on services that make money is reshaping the once free spending company. After hours, we do have shares of Amazon rallying now by just about 5%. We've got more on both Amazon and Meta coming up with James Chakmak of Clockwise Capital. The Dow, the S&P, and NASDAQ all rallied ahead of earnings today, a day after that Fed-inspired sell-off. S&P up 60, a gain today of 1.2%. The S&P, by the way, closing back above 4,900, 4906 on the S&P 500 index today. We had the Dow up 369, up by 1%. NASDAQ up 197, a gain there of just about 1.3%. 10-year, 3.87%. 2-year, 4.20%. Spot gold up $14 the ounce, higher by 0.7%. West Texas Intermediate crude today down 2.5%. WTI 73.95 a barrel. Bitcoin up today by 1.6%, 43,154. First day out for Immerse Sports, shares at 1340, ending today's session. Again, recapping tech shares rallying after hours. S&P today up 60, a gain there of 1.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, can't say it enough. You got Meta up about 12%, a massive buyback, $50 billion, boosting another buyback, $50 billion, announcing its first dividend ever. Not that, what?
There's also some news about the actual metaverse in this.
Exactly.
Very deep in this, Carol.
Go to it.
The company is going to continue to lose money in Reality Labs. It's the division that makes the metaverse technology. But here's a bright spot for Zuckerberg, as our own Aisha Counts points out on our live blog. His VR ambitions, that is, quarterly revenue in Reality Labs crossed $1 billion for the first time.
Yeah, so maybe it's starting to contribute.
It's an incredible quarter for the company.
All right, let's get to it. James Chakmak sitting by, partner and technology analyst at Clockwise Capital. We've also been talking about Amazon, which is also up about 4 or 5% here in the aftermarket. It reported strong profit, gave an operating income outlook that surpassed estimates. Again, talking about, Charlie mentioned this, CEO Andy Jassy's unrelenting cost-cutting and focus on services that make money is reshaping the once free spending company. Yeah, it's a little bit different perhaps under Andy Jassy, but nonetheless, James Chakmak, we're waiting for Apple. You've had a little bit more time to think about these results. Go back to Meta. It's been on a tear for a while. As we said earlier, I mean, it's doing better than Apple has been and Amazon this year. What is it about that Meta story that you think all of a sudden their focus is right now?
Yeah, first I say with all these dividends and buybacks, it's like these tech companies are becoming the new Dow component.
Mm-hmm.
As far as Meta is concerned, I think one of the best things that could have happened to them was the Apple's privacy changes, because that absolutely, destroyed them. Where in the sense that they could not target users in the way that they used to, and Apple obviously, preferred, their targeting capabilities over third parties. So, but what that enabled them to do was actually come out stronger on the other side of it. Where they retooled everything and improved targeting capabilities and essentially increased the span of the walled garden that they have, and in that process, I think has increased their competitive positioning versus smaller scale ad companies that couldn't adapt fast enough or didn't have the resources to adapt. So I think it just made them stronger at the end of the day, and I think as we look forward, it's going to be very difficult for them to be derailed as far as the top line is concerned. And when we think about the overall value of the company, I think it's conceivable that next year we could be looking at $20 in earnings, and at a 25 multiple, that puts you at $500. And potentially there's upside to those numbers here. And that's when it comes back to what is the base case? What is the optionality? Base case, I get 500.
You mentioned, James, other smaller companies. Snap is a company you followed for years. It's been under pressure lately, but it is up 6% in the after hours in sympathy with Meta Platforms. What do Meta shares tell us about what Snap could report?
Yeah, I just don't really care for Snap anymore. I think they haven't found their niche in the manner in which I originally thought that they would. For smaller tier players, I like a Pinterest, for example. I think they really have their DNA set on the inspirational social feeds and increasing their presence on the commerce side of the equation. So, I'm looking at more companies like that. Now, we sold out of Pinterest because it got ahead of our valuation targets, but it's companies like that I think can still have a place, but at the end of the day, it's still going to be the Googles and the Metas of the world.
Well, speaking of that, so as we've been talking about Meta, just on a tear right now, it's up about 11-12% here in the aftermarket, 13%, forgive me. Amazon's up about 5.5%. Obviously, if you bought it yesterday, it was a better timing call. Yeah. But having said that, and everybody says don't time the market, don't time names, and so on and so forth. Anything, though, in these reports that would say, you know what, I need to take a look. Maybe it's time to allocate a little bit more to these names specifically.
Well, we're already, we run pretty concentrated, so we're pretty heavy. But I would say at this point, Amazon continues to offer the most upside at 225 is kind of where we're thinking it can go over the next year and a half.
That's about a $65 run from here, yeah.
Yeah, and then Meta, obviously, we think can get to 500. But I think I would own all three. I mean, at this point, kind of we view a full-size weight around this, upwards of 6% of the portfolio. So, we don't mind being at max weight on those and letting them run if they, they go north of that, which they will, after tonight's result.
The ETF that you guys have at the Clockwise Core Equity ETF, I should note, NVIDIA is the top holding at 5.3%, then Spotify, Meta Platforms, Microsoft, Amazon, Apple, rounding it out.
Yeah, so you're all in, no doubt about it. Hey, listen, we're watching Apple in the aftermarket. It is up about 0.6%. In about a minute from now, we assume we will be breaking down those Apple earnings. What are you watching out for most in those results?
Obviously, on the guidance, on the iPhone outlook, I think the quarter is going to be fine, actually. One of the things that I think is underappreciated this quarter is the reversal and reacceleration on the Mac side. I think that could surprise to the upside. The street's expectations are pretty modest at 1% growth. So I think the quarter will be okay. I think the big question is going to be, what is that iPhone device outlook for the year? And then for the next quarter, but we won't really know that until the CFO's commentary.
Do you think that the China issues are overblown, James, for Apple's iPhone?
Yeah, just to some extent. It's hard to say. But we're not relying on massive growth in the iPhone. What we're relying on is no massive deceleration in the iPhone. As long as it's the status quo there, they have other levers. Okay.
James, hang on, because we've got first quarter numbers coming for Apple, and this is...
It's a beat when it comes to first quarter revenue for Apple. $119.58 billion, beating estimates of $117.97 billion. First quarter revenue for the iPhone coming in above estimates, too, at $69.7 billion. Estimates were for $68.55. Greater China revenue also missing expectations significantly, $20.82 billion versus estimates of $23.5 billion.
Yeah, maintaining its quarterly dividend at 24 cents a share right now. Apple shares just up about 0.4% here in the aftermarket. We can dig a little bit deeper. iPad revenue, $7.02 billion, a little light, but pretty much in line. The estimate was $7.06 billion. First quarter wearables, home and accessories, $11.95 billion. The estimate of the street was a little bit above that at $12.02 billion. Mac revenue, $7.78 billion versus the estimate of $7.9 billion. And again, going though to what really matters is the iPhone. iPhone revenue, as Tim mentioned, $69.7 billion. That was a little bit above the estimate of $68.55 billion. Again, though, we're seeing Apple down about 0.5% here in the aftermarket. Expenses, total operating expenses, $14.48 billion. That's a little bit light. 14.62 is what the street was looking for. And first quarter EPS, $2.18 a share. That was 7 cents better than what the street was expecting. So that's just the initial reaction. And again, as we said, shares of Apple here in the aftermarket, while Meta and Amazon are rallying big time, we've got Apple shares just now down about 1% here, Tim.
James, what do you think about this? We have a minute left with you. You heard us rattle off some numbers there. iPhone coming in above estimates, and then first quarter revenue coming above estimates, but a pretty big miss when it comes to Greater China revenue. What are your takeaways?
There could be something to be said about the reports coming out that the China market may see greater competition. But again, I want to wait for the call to make that determination. But the biggest standout from the numbers you just cited was Mac was lighter than I expected. I thought that could reaccelerate. iPhone status quo, or I guess better than the street, but largely status quo, so that's fine. And then the wearables and iPad was already expected to be down. So I think this is a wait and see. It could go either way.
Yeah.
But it's a position that we've downsized.
The company's CFO in the press release saying, during the quarter, we generated nearly $40 billion of operating cash flow, returned almost $27 billion to shareholders. We're confident in our future, continue to make significant investments across our business to support our long-term growth plans. James, be quick. 10 seconds. Number one question on the call for you.
The number one question, would likely be, I would talk about the PC upgrade cycle. Their view on, the timing of that, and this is indeed a 24 event.
All right, really appreciate it. James Chakmak over at Clockwise Capital. Thank you so much.
Hey, let's get to world and national news. We got Nancy Lyons standing by in Washington, D.C. Hey, Nance.
Hey, Tim. U.S. officials have reportedly approved strikes against targets, including Iranian facilities inside Iraq and Syria. The strikes are in retaliation for a drone attack that killed 3 American troops based in Jordan. Defense Secretary Lloyd Austin says this is a dangerous moment in the Middle East.
We will continue to work to avoid a wider conflict in the region, but we will take all necessary actions to defend the United States, our interests, and our people. And we will respond when we choose, where we choose, and how we choose.
Secretary Austin speaking in his first news conference since being treated for prostate cancer. President Biden signed an executive order today allowing the U.S. to impose more sanctions on Israeli settlers and possibly government officials involved in violence against Palestinians. The order marks one of the most stringent punishments the U.S. has ever imposed on people deemed responsible for settler violence in the West Bank. A powerful storm system is hitting Northern California. It's the first of 2 back-to-back atmospheric rivers. Rosie Ritchie is co-owner of the Beach House restaurant in Seal Beach.
Well, after the last flood, we are very concerned, but we're happy because the city brought the berms back, which is nice. That'll protect us.
Flash flooding is a risk, along with high winds, power outages, and possible landslides. The mother of Oxford High School shooter Ethan Crumley has been testifying today in her involuntary manslaughter trial. Jennifer Crumley is facing charges after giving her son the gun that was used to kill 4 students and wound 7 others. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. From Bloomberg World Headquarters, I'm Charlie Pellet. Big gains for big tech after hours. Right to the numbers here, because Apple reported better sales than expected in the holiday quarter, snapping a year-long slump after strong iPhone sales around the world helped make up for weakness in China. Right now, Apple is higher after hours by roughly 6%. Also reporting after the close of trading today, we heard from Meta Platforms. It gave a forecast for revenue growth in the current quarter that beat analyst estimates. The story, though, the stock's response, a buyback and a dividend. After hours, Meta surging by 14%. And Amazon delivered strong profit and gave an operating income outlook that surpassed estimates, suggesting CEO Andy Jassy's unrelenting cost-cutting and focus on services that make money is reshaping the once free spending company. James Chakmak is principal portfolio manager at Clockwise Capital. He was a guest moments ago right here on Bloomberg Business Week.
I mean, this is a company that's, over 50% of every new dollar that goes online, they capture. Wow. They have all these new levers with, advertising. Now they're the third largest ad platform in the world. And, a lot of these things aren't talked about. The revenue that's going to flow through on the ads that are placed in Prime Video are just going to trickle down to the bottom line.
And today, ahead of those earnings, we saw a rebound for stocks a day after Jay Powell's news conference, in which he dampened hopes for a March rate cut. Liz Ann Saunders is chief investment strategist at Charles Schwab, and she was a guest right here on Bloomberg Business Week.
I do think that this is an opposite cycle. It's always been said that the Fed takes the escalator up when they're hiking and the elevator down. I think it's the opposite this time. They clearly took the elevator up with multiple hikes of more than 50 basis points. I think the inclination at this point is to be more escalator-like on the way down.
And an elevator up today for the U.S. stock market. S&P up 60, a gain of 1.2%. Dow Industrials up 1% today. NASDAQ up 1.3%. 10-year yield 3.88%, with a 2-year 4.20%. Spot gold up $15 the ounce, up 0.7%. Immerse Sports, first day out there, ended the session at 1340, went public at 13. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thank you so much for that update, Charlie Pellet. Really, really appreciate it. Well, Vail Resorts is an $8.3 billion publicly traded company with more than 7,000 employees. It's known as the operator of some pretty legendary ski areas in Colorado and the American West, including Vail, Beaver Creek, Breckenridge, Keystone, Whistler, Heavenly, and more.
Yeah, even though it's called Vail Resorts, about 2/3 of the properties it has in North America are now east of the Rockies, and this is thanks to an acquisition spree over the last 7 years or so. And the highest concentration of resorts are in the Northeast. One of those resorts is Attitash Mountain. It's in New Hampshire.
Hey, Austin Carr, Bloomberg News technology reporter, drew the short straw and had the tough assignment of spending a significant amount of time at a ski resort, writing about it for Bloomberg Business Week. You can check out Austin's story on the Bloomberg terminal and at bloomberg.com/businessweek. Austin joins us now from our Boston studio. So, Austin, you did go to Attitash and spend some time there over the last few months, but what you found is really interesting because some of the skiers there have been pretty upset with their corporate overlords over the past few years. Bring us up to speed on what's going on at Attitash and how that speaks about the bigger Vail Resorts story.
Yeah, so Attitash is one of the old-timey New Hampshire mountains that Vail Resorts bought up a few years ago. And this is a resort that dates back to the 1960s, if not earlier. It's one of those sort of places in rural New Hampshire that skiers obsess about despite the icy conditions, the rainfall, the wind. And it was very dated until Vail Resort bought it. They had a lift that was frequently breaking down. It took about 20 minutes to get to the top, at which point people felt frozen. There was bad snowmaking, there was poor infrastructure, bad service, and everyone thought this would be totally upgraded when Vail bought the mountain in 2019. But that didn't happen at all. In fact, the sort of years that I was looking into the story and talking to people around Attitash more recently, they were upset about everything under Vail. They thought they were going to get this huge deluxe overhaul, and anything but that happened. They just actually ended up with pretty mediocre conditions, which you would never expect under someone that owns Breckenridge and Vail.
So what happened, Austin? What does Vail say?
So Vail basically bought the mountain in 2019. What they say is, you know what happened 6 months after the acquisition? COVID hit. We were still figuring out. We bought about 17 mountains in 2019, right before the pandemic hit. And during that process, they had to deal with a huge amount of transition. There was a big global labor shortage. And when you have a labor shortage at a ski mountain, that means you don't have people to groom the mountain, to make snow, to deal with people in line scanning lift tickets. And so they just had to, they basically said that they were always going to invest in these mountains, but it just took a few years to get there. But during that time, there was a massive backlash towards Vail Resort, not only at Attitash, but at mountains around New England and the Northeast, from Pennsylvania, New York to Vermont, at places like Stowe.
Hey, can you talk, Austin, a little bit about Vail Resort's strategy here of picking up a few dozen mountains over the last few years that are definitely not on the same level as what they have in the Rockies and in California?
Yeah, so I think a lot of people associate Vail with powder skiing, big mountains out west, as you noted, in the Rockies. But a lot of their strategies now is based around these so-called feeder properties. These are smaller, local regional resorts around major metropolitan hubs in the East. And the basic idea is that people learn on these small hills, and then they graduate to an expensive trip out west. So the CEO of Vail, Kirsten Lynch, actually, she grew up around Chicago, started skiing in Wisconsin, which is not a place that you'd think about for skiing, but it has a couple small mountains, one of which they bought up about a decade ago. And they expanded from the Midwest into the East by buying all these regional local mountains, assuming that they could sort of just take, I guess, some of these skiers for granted. The ski pass that they offer, the Epic Pass, is a seasonal pass that's really much cheaper than a lot of the single mountain season passes that you see out in the East. Yet I think there's something that happened with the expectations that Vail has brought to skiers, expecting that sort of highbrow, high-lux, quality conditions that they never quite delivered or expected to have to deliver to these skiers out east.
So Austin, I lived in Vail when they released the Epic Pass back in 2008, and it was such a big deal because a season pass to just Vail was over $1,000, and then they come out with this thing that Rob Katz designed called the Epic Pass that gives you access not just to Vail but to so many other mountains that Vail Resorts owned, all for a price of like half of what a pass just to Vail would cost. It was a huge innovation, and a lot has happened in the ski industry since then. There's some really interesting color in your story about the way that the folks over at Attitash felt about Vail Resorts. Talk a little bit about the what happened with the map online, because I think this kind of speaks to the way they felt.
Yeah, I mean, during the process, they really felt like second-class citizens around New Hampshire to Vermont, and especially at Attitash, one person told me, look on Vail Resort's website. And of course, when I went there, they have a big map of all their properties, and Attitash is actually in the wrong place on the map. And it felt to these locals
That's terrible.
People did not, the executives at Vail might not have known quite where this mountain is. It was sort of an interesting process, sort of, even talking to Vail executives about these regional properties. I mean, I talked to the CEO of Vail, and I was just asking her, she kept saying, we want each of these local mountains to have their own identity. And when I asked her what the identity of Attitash should be, she didn't have an answer, just said, talk to one of the locals there. And I think that type of reception, that type of feedback from sort of higher ups in Colorado is exactly what people feel angry about around New Hampshire, and why they had been pushing for so long to get more investment in these properties.
Well, Austin, it's a great story. I encourage everybody to check it out, and also the graphics on it are amazing. So read it online at bloomberg.com/businessweek. Austin Carr, Bloomberg News technology reporter, joining us from our Boston studio. Thanks, Austin.
All right, we just want to give everybody a little bit of break as we go back, though, to the big tech earnings that came after the closing bell. I'm looking at NASDAQ E-mini futures. They're up about 2.1% in the aftermarket. If you're trying to get an idea of the impact that they could all have on tomorrow's trade, Meta continuing to be up about 15% in the aftermarket. We've got Amazon up about 8%. Meta beating on its sales forecast estimates, announcing its first dividend, boosting its buyback by $50 billion. Amazon up 8%. They too had some upbeat news.
Yeah, it's pretty amazing. Hey, I'm going just to Apple, Carol, because this is an important one. Our own Emily Chang spoke to Luca Maestri, the Apple CFO, and he did talk about outlook in China, which is sending shares lower. He said, quote, quote, "We're not happy about the decline, but we know that China is the most competitive market in the world. We continue to see significant opportunity for us in China in the long term."
All right, so China, a big one. We did say first quarter Greater China revenue, $20.82 billion versus an estimate of $23.5 billion. So you can see that disappointment. All right, folks, tech is on our mind. This is Bloomberg Business Week.
Company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Emmerse sports shares moved higher today. They began trading at $13.40 a share. Shares did rise as much as 6.2% above its U.S. initial public offering price after its first-time share sale, price below a marketed range. Citizens Financial Group Chief Executive Officer Bruce Van Saun says the problems that led to the collapse of several American regional lenders last year are largely in the past, with the issues disclosed this week at New York Community Bank something of an anomaly. Van Saun spoke this morning with Bloomberg Surveillance.
As the year went on, people could differentiate between the traditional regional banks and how well they've managed and been able to handle their interest rate risk. And so deposit pressures eased as the year went on, and so things are starting to feel a lot more normal. So yesterday's announcement on NYCB was a bit of a surprise. I think that's an outlier.
And yesterday we did see NYCB down 37%. Today we had New York Community Bancorp sinking for a second straight day, as at least 5 Wall Street analysts downgraded their recommendations, and Moody's Investor Service put the bank's credit rating on review for a downgrade. Deutsche Bank's provisions for losses in U.S. commercial real estate were more than 4 times bigger in the last quarter, as it warned that refinancing poses the greatest risk to the struggling sector. Lazard beat analyst profit expectations, capping a challenging year for deal-making and strengthening the position of Chief Executive Officer Peter Orszag in his first year leading the firm. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Massey on Bloomberg Radio.
All right, everybody. Tim and I getting ready to wrap up on this, Thursday.
We might have to stay.
I know. Yeah. Maybe we'll just do another 3 hours.
Maybe we should. There's enough going on.
Can we just talk about Meta? It is just off and running in the aftermarket. Who would have thunk that this would be the outperformer? But yeah, that's what happens when you say you're going to boost your buyback by $50 billion. And hey, we're going to announce our first dividend.
Maybe a dividend, yeah.
Yeah, why not?
Hey, shares of Meta Platforms up 14% right now.
What did James Chalmers say? It's the new, what did he say about these names?
Oh, he said it's the Magnificent Seven is Meta,
the new Dow components?
Amazon, and Microsoft. Yeah, he called them the new Dow components.
The new Dow components.
Hey, Amazon up 8.7%. I want to welcome in Doug Krisner from Bloomberg Daybreak Asia.
Doug's
He's here with us.
Yeah.
You got to turn your microphone on, Doug.
Oh, man, it's the second day in
you
a
need
row.
Some help with this?
I didn't put the headset on today.
That's okay.
Amazon first quarter net sales, 138 to 143.5 billion. That's a little bit upbeat. 142 is the estimate out there. Cost cutting seems to have worked for them.
Do you want to comment for me?
I would.
Okay, so you look at the E-mini futures contract now, the NASDAQ 100 contract is up more than 2%.
I did.
So we've got the employment report tomorrow, and if this number is market-friendly, I think we could be off to the races.
What's a market-friendly number?
Something that doesn't spoil the party when it comes to expecting rate cuts. Okay, Powell seemed to take March off the table yesterday. May is, I think, what the market is thinking now. So if the party is not spoiled with a very hot reading tomorrow, then I think we're off to the races.
Okay, 185 is what we're expecting to see. We got 216 last month.
But the productivity number today?
Well, wait. Stuart Paul at Bloomberg Economics, he says there's a lot in that January payrolls number. The weather was warm, and that drove payrolls up, I guess, in December. So he said January we kind of get, kind of in contrast, the numbers could look different. He said there's a lot of nuances in that number, so be smart in how we go through them.
So be smart. Listen to Bloomberg Radio at 8:30 a.m. Wall Street time. The guys will break it down for you. But if it's market friendly, combined with what we're seeing now in late trading, and you look at the futures.
Soft landing, anybody?
Maybe. I was saying that. Is there an echo in this room? I was saying that a while back, and you kind of, you didn't think that it was possible.
Maybe I was just
giving you a hard time. Are you coming around now? You could have been.
Maybe I was just giving you a hard time.
Want to talk Apple now before we wrap up?
Yes.
Yeah, this is really interesting. What sticks out to me is the miss on Greater China revenue.
$3 billion.
That's a big miss.
That's a big miss.
Because analysts knew that it would be soft given what's happened in China, but this is really soft.
The government restrictions on employees at state-owned agencies not being disallowed iPhone usage. Jeffries is looking, I think, for double-digit declines. But the other thing, it's not just the government restricting the use of the iPhone, but it's the Huawei phone now that I think is really kind of getting a lot in the way of traction among local consumers. And kind of going into the end of next week and the week beyond is the Lunar New Year holiday. And so whether or not new smartphones are going to be a gift to give, and you've got to wonder, whether Apple is going to be a beneficiary.
Right.
It's still a preferred device, although on the sales side, you look at what Huawei is doing. It's pretty phenomenal. There's been a shift.
Our Mark Urban says investors are clearly peeved by the China numbers, with the stock falling as much as around 2.8% so far after hours. This was a few minutes ago. Stock's now still down, but only down about 0.8%. Apple earning rivals today. Meta and Amazon are both in the green. That's what we see. In comparison to what we got from Meta and Amazon, my head is kind of spinning.
You know what's interesting? If you have all of this excess cash that you want to distribute to shareholders,